Yes, people, good morning, good afternoon, good evening to all South India student. How are you? Hope so. You are good. I'm also good. Good evening, everyone. Yes, sir. So, guys, today we are going to start with your subject. That subject name is a income tax or direct tax law. So, we are going to start with the direct tax law and international taxation subject. So, guys, in direct tax law, there is only one law, that is the Income Tax Act. So here, you have to understand the income tax laws. And guys, to understand the income tax law, you should have knowledge of certain provision. First is, you should have the knowledge of the Income Tax Act. Income Tax Act 1961. So Income Tax Act 1961, this act is basically, you can say that the main provision of the income tax law, or you can say that Rohit Sharma of the Indian cricket team. So Indian cricket team is an income tax law, and in income tax law, that main provision, all the main provisions are provided or given in the Income Tax Act 1961. Now guys, this Income Tax Act 1961 is applicable to whole India, including Jammu and Kashmir. So it is applicable to whole India, including Jammu and Kashmir. So obviously it is applicable to whole India. And guys, this Income Tax Act 1961 is applicable from 1st of April 1962. So Income Tax Act is applicable from 1st of April 1962. It means assessment year 62-63. Assessment year 62-63, or I can say that previous year is 61-62. So Income Tax Act 1961 is the main, you can say that it is a captain of income tax law, and it is applicable to whole India, including Jammu and Kashmir and all. Everywhere it is applicable. Whole India it is applicable. It is applicable from 1st April 1962. And it is applicable for assessment year 62-63, means it is applicable for previous year 61-62. So Income Tax Act is applicable from previous year 61-62. Now guys, now to support Income Tax Act, our lawmakers can make the rule also. And here there are Income Tax Rules 1962. So Income Tax Rules 1962. So Income Tax Rules 1962. Now question is that why they made the rule? Because in Act everything is given? No guys, in Act everything is not given. For an example, in Act it is written that depreciation is allowed at the prescribed rate. Now what do you mean by prescribed rate? So here in the rule they will prescribe the depreciation rate. And in the rule they prescribe the depreciation rate. For computer depreciation rate is 40%. For furniture, depreciation rate is 10%. For plant and machinery, depreciation rate is 15%. So where it is given? Guys, it is given in the income tax rule. One student came, one person came and he asked me, sir, I want to teach the direct tax. Then just I asked one question to him. Can you tell me what is the depreciation rate for the computer? He mentioned 40%. I asked him where it is given that depreciation rate is 40%. He mentioned that, sir, depreciation rate is 40%. It is clearly given in section 32. Then I have handed over him the Income Tax Act 1961 and asked him to just show me where it is written. So he was, that flipping page and page 32, whole 32 section, he has read it. And after that, he mentioned that, sir, it is not given in section 32. It is given in the Income Tax Rules 1962. So guys, basically income tax rules are for the support to Income Tax Act. So in Income Tax Act, they have mentioned that you have to file your income tax return in the prescribed form. So where that form is prescribed? Form are prescribed in the Income Tax Rules 1962. Like in the GST, you have to pay the GST on the value of the services, but where valuation rules is given, that is given in the rules. So separately there are rules for the valuation. So that is called your rules. So guys, here to support the Income Tax Act, they made the rule. So in Income Tax Act, all the main provisions are given. But valuation of the perquisite, rate of depreciation, prescribed form, everything, valuation of the asset, how to calculate the FMV of asset, that is given in the rules, and these rules are known as the Income Tax Rules 1962. Now guys, Income Tax Act 1961 already made in the 1961. Income tax rules are there, but every year there will be some amendment in the law. And every year there will be some amendment in the law. And guys, these amendments are always made through the Finance Act. This amendment are made through the Finance Act, or people call it Finance Act also, Finance Act. Now guys, how this Finance Act comes into the pictures? So guys, if you remember, then you know that every year there is a budget. So every year our finance minister present the budget in the parliament. Every year finance minister present the budget in the parliament. And normally budget is presented on the 1st of Feb of every year. So 1st Feb every year finance minister present the budget in the parliament. And guys, like 1st of Feb of every year, our finance minister present a budget in the parliament, and in that budget there is a one part of that budget is known as the finance bill. And guys, normally every year there is only one budget, one finance bill. But guys, whenever there is an election year, then in election year there is always two finance bill and there will be always two finance act. One budget or finance bill is presented by the finance minister before the election as on the 1st Feb of every year, like that year. And guys, second budget or second bill will be after forming of the government, means whenever a new government will be formed, and after new government, that finance minister will present the new budget. And that first budget that is presented in the month of Feb, normally that is known as the interim budget. People call it as the interim budget. And guys, whenever government will be formed and after election result, new government came into the pictures and new government presented the budget, that is known as the final budget. So guys, here in this year was the election. So current year 2024 was the election year, and in 2024 there were the two budget. That first budget was presented by Nirmala Sitharaman only as on the 1st Feb 2024. Nirmala Sitharaman. So Nirmala Sitharaman presented the first budget, and in that first budget there was a one finance bill, and that finance bill is known as the Finance number 1 bill 2024. So finance number 1 bill presented by Nirmala Sitharaman as on the 1st Feb 2024, and it is known as the finance number 1 bill 2024. Now guys, whenever budget is presented by the finance minister in the parliament, after some time there will be a discussion on that budget or discussion on that bill, because all the provision they will like income tax changes as well as your GST changes, custom changes, that changes will be part of the finance bill. So once that finance bill was presented by our finance minister, after that there will be a discussion session on that finance bill. And in the Lok Sabha and Rajya Sabha, so Lok Sabha is basically your lower house and Rajya Sabha is called your upper house. So there will be a discussion in the parliament, and after parliament discussion, this bill will be passed from the Lok Sabha as well as the Rajya Sabha, and after that this bill will be sent to our President of India. This bill will be sent to the President of India, and President of India will give the assent on that bill. And on the date on which that assent is given by the President of India, that day that finance bill will be known as the, from that day that finance bill will be known as the Finance Act. So here guys, that first budget in the current year as on 1st Feb 2024, it was presented by our finance minister Nirmala Sitharaman. That was known as the finance number 1 bill 2024. It was discussed in the Lok Sabha, Rajya Sabha. After that, it sent to the President of India, and President of India has given the assent on the 15th of Feb 2024 only. So on the 1st Feb, it was presented, and on the 15th Feb 2024, they our President gave the assent, and on that day, it is known as the Finance number 1 Act 2024. So Finance number 1 Act 2024 became on the 15th of Feb 2024. Now guys, current year is basically your election year. So in the election year, you know that always there will be two budget or there will be two finance bill whenever there is an election year. So current year is an election year. So first budget presented by Nirmala Sitharaman as on the 1st Feb 2024. Now election was in the month of the April May. New government came into the pictures, same government repeated. But they have presented the another budget. Nirmala Sitharaman presented the another budget, and that budget was presented in Parliament on the 23rd of July 2024. 23rd of July 2024, and in that budget there is a one document that is known as the Finance Number 2 Bill. Finance Number 2 Bill 2024. After that, there was a discussion in the Lok Sabha and Rajya Sabha. And after Lok Sabha, Rajya Sabha, it is sent to the President of India, and President of India has given the assent on that bill. And guys, President of India has given the assent on that bill as on the 16th of, I think, August. Just give me 1 minute. That assent of President received on that bill as on the 16th of August 2024. So on the 16th of August 2024, our president signed that bill. So from that day, it is known as the Finance Number 2 Act 2024. So remember, like how amendment will be made in your Income Tax Act and your GST Act and your Custom Act and all. So guys, every year our finance minister present the budget. And in that budget, there is a one instrument is called your finance bill. And that finance bill contain all the amendment, but it is first just a proposed in the budget. Means finance minister proposed in the budget, and guys, when finance minister proposed in the budget, after that there is a discussion session in your parliament. And after discussion session, that finance bill is passed by Lok Sabha as well as the Rajya Sabha. After that, signed by the president, and from the date on which it is signed by the president, that instrument is known as the Finance Act. So every year, normally there is a one budget only, one finance bill, one finance act. But guys, in the year in which election took place, one is the pure example of the current year 2024, and last time also 2019, there was an election year. So always in the election year, there are two budgets. One budget is before government forming, that is in the month of Feb, 1st Feb 2024, and second budget is after forming the government. So current year, that budget was on the 23rd of July 2024. Now in the budget, there is a one instrument that is known as the finance bill. And guys, that bill is once is a proposed in the parliament. After that, there will be lots of discussion in the parliament on that provision, that amendment. And after that discussion, that bill will be passed from the parliament, and after that signed by the president, and from the date on which it is signed by the president, it is known as the Finance Act. So in current year, there are basically two Finance Act. One is the Finance Number 1 Act 2024, and second is the Finance Number 2 Act 2024. Now my one general question to all of you. Guys, my question is, sir, whatever amendment proposed in the finance bill, is that all amendment will be part of Finance Act also, or there may be a change? Means finance bill and finance act is both will be word to word same, or there may be some changes in the finance bill, and after discussion there may be certain changes, and in the finance act that provision will be different. So my question to all of you, sir, in parliament, Nirmala Sitharaman ji presented the budget. So Nirmala Sitharaman ji proposed the finance bill. So in finance bill, suppose there are certain amendment. Is in the Finance Act that amendment will remain same, or there may be a change also? Tell me. There may be change, or it will be like same. Word by word it is same, or there may be a change. Huh? Change is possible, or it will remain same. Right answer is right answer is there may be a change also. Guys, it is like, you know, that it is not like that whatever provision contained in bill, that same to same provision will be in the act. That is not there. there may be certain changes also. Suppose in the finance bill there was some mistake, there was some omission, or suppose there was some amendment that is not favorable. So they may remove that amendment, and in the Finance Act there will be a corrected form. So guys, this time it happened. Every time it's happened basically, but this time if you remember, then you know that when bill was presented by Nirmala Sitharaman, on the 23rd of July 2024, then Nirmala Sitharaman says that now there is no indexation. That indexation benefit is removed by Nirmala Sitharaman. But guys, when that Finance Act is passed from the parliament, then you just heard that, you know that in case of immovable property, they have restored the indexation. You got it? So what happened? In the finance bill, they mentioned that basically there is no indexation on or after 23rd of July 2024. In case of capital gain, there is no indexation. But guys, you know that there was lots of suggestion from the people why you are removing indexation. We are having the immovable property. We have immovable property from last 20 years. And now you are saying that indexation is not applicable and all. So you are doing the wrong. So what Nirmala Sitharaman ji said that don't worry about that. So in the Finance Act, when Finance Act is passed by the parliament and it is signed by the president, so that time what happened? Nirmala Sitharaman ji restored the indexation partially. Now, how Nirmala Sitharaman restored the indexation, that I will discuss in the capital gain topic. But guys, in case of immovable property, Nirmala Sitharaman ji has given the option. Okay, you can take the indexation or you can calculate without indexation, whichever is more beneficial to you, you can opt it. That exception, that provision is contained in the Finance Number 2 Act, but it is not contained in the Finance Bill. So guys, it is not possible. It is not like that whatever provision contained in bill, that as it is, this provision will contain in the act. No, nothing like that. There may be a change. Some provision was there in the finance bill, but that is not part of the Finance Act. So that is possible. Answer is yes, it is possible. Now, one question from the student, sir, for our examination, is that Finance Act number 2 Act 2024 is applicable or one is also applicable? Right answer is both is applicable. So if there are 2 Act, means there are 2 separate Act and both are applicable for your examination. So Finance Number 1 Act 2024 is also applicable for you, and Finance Number 2 Act 2024 is also applicable for you. But guys, in the Finance Number 1 that Act, there was no much changes. There was only 3-4 small changes was there in this first act, but in the second act there are lots of changes. Approx there are 90 or 92 changes are there in the income tax. We will discuss that changes whenever it is comes in the topic. We will discuss that changes. Okay, so we have discussed that, guys. Okay, income tax law. To understand the income tax law, you should have knowledge of the Income Tax Act 1961. Income Tax Act is basically 1961 is a main provision of the law. Everything is given in the income tax law, but to support the income tax act, they made the income tax rules. So under income tax rules, that valuation rules, perquisite rules, like return form, depreciation rate, that is given in the income tax rules. Now every year, to change the income tax act, they always come with the Finance Act every year. Now normally Finance Act is one Finance Act in the year, but guys, whenever there is a whenever there is an election, then there are 2 budget, 2 Finance Bill and 2 Finance Act, and both are applicable for your examination. Now guys, this both Finance Act are applicable for the assessment year 25-26. So for your examination, your previous year is 24-25. And your assessment year is 25-26. Now, what is the previous year and what is the assessment year? So, guys, previous year is basically year in which you earn the income. That is called your previous year. Assessment year is a year in which you file your return, you pay your taxes and all. That is called your assessment year. So, for your examination, your previous year is 24-25. 24-25 is your previous year. It means whatever income you earn between 1st April 2024 till 31st March 2025, that income is going to be assessed in the assessment year 25-26. Means your assessment year will start from the 1st April 2025 and ended on 31st March 2026. So previous year is basically year in which you earn the income. You earn the income, that is called your previous year. An assessment year is a year in which you pay the taxes. You pay the taxes or you file the return and all. That is called your assessment year. So whatever income you have earned in the previous year 24-25, that is going to be assessed in the assessment year 25-26. So you will file your return of income and all in the assessment year 25-26. So this budget, that budget presented by Nirmala Sitharaman in the month of Feb and in the month of July, that became the Finance Act 2024. This is applicable for the previous year 24-25 and assessment year 25-26. So it is applicable for previous year 24-25 and assessment year 25-26. So always remember, previous year means year in which you earn the income. That is called your previous year. Assessment year means year in which you pay the taxes. That is called assessment year. You file the return. That is called your assessment year. Now for your examination, your previous year is 24-25 and your assessment year is 25-26. Now guys, remember, your assessment year will always be of the 12 month. Your assessment year will always be of the 12 month. 12 month means from 1st April 2025 till 31st March 2026. Sir, previous year is also of 12 month. So normally your previous year is also of the 12 month. But guys, suppose your new business is started or new source of income is arised, then your previous year may be of the less than 12 month. Again, I am repeating, try to understand. Your assessment year will always be of the 12 month. So your assessment year is always be of the 12 month. So assessment year always 12 month. But guys, your previous year is normally it is of the 12 month. But suppose for an example, your new business is started or new source of income is arised, then your previous year will be less than the 12 month. I can take an example. Just suppose for an example, if any person business is started from 10 December 2024. If business is started from this date, then your previous year will start from the 10 December 2024 and this previous year is going to be completed by 31st March 2025. So previous year can be of the less than 12 month also. So here basically business is started. So when business is started here on the 10 December 2024, then guys, this previous year will start from this date and previous year ended on this date. But assessment year will always be of the 12 month. Okay, now one more point. Guys, to understand the income tax law, you should have the knowledge of the Income Tax Act 1961, Income Tax Rules 1962 and the Finance Act 2024. Now guys, also you should have the knowledge of the notification. Also, you should have the knowledge of the notification. Now, what is the meaning of notification? So guys, our central government, this power is with the central government or CBDT. CBDT means Central Board of Direct Tax. So Finance Ministry, in the Finance Ministry, there are two boards. One is the CBDT, Central Board of Direct Tax, and one is the CBIC. That is CBIC is indirect taxes and custom and all. They like CBIC look after the indirect taxes. Now CBDT is look after the direct taxes. So our central government or CBDT has the power that to notify the amendment, to give the notification, to notify certain amendment, they may issue the notification. So guys, this notification is issued to notify the amendment. To notify the amendment or to give the effect of the amendment, CBDT can issue the notification. Now guys, I can take an example. Suppose notification means, for an example, in the act, they have mentioned that suppose GST rate is instead of 18%, there will be a 15% GST rate from the date on which it is notified. So still notification is pending. So from the date on which it is notified. So guys, here they will notify through the notification and they will issue the notification. So notification is basically to give the effect of the amendment. So if there is any amendment, to give the effect of the amendment, they will issue the notification. Now you know that they are coming with one scheme, that is Vivad se Vishwas scheme, I think. Vivad se Vishwas scheme. So there are lots of pending cases. To just resolve that, they came with the Vivad se Vishwas scheme. So in the Finance Act, they mentioned that this scheme will be notified from the date on which it is issued in the notification. So guys, they issued the notification and they mentioned that this scheme will be applicable from 1st October 2024. So that is called notification. So notification means to give the effect of the amendment. To give the effect of the amendment, that is called notification. So guys, here on our income tax website, you can find many like notification. So here central government CBDT has this power that central government CBDT can issue the notification. So here I am just showing you some notification. Now this is one notification, like notification on the 16th October, they have issued some notification that in exercise the power given by the law. So in law they have given the power. The central government hereby specify that no collection of taxes shall be made under subsection 1F of 206C of that act, any payment received from the RBI. So guys, they notify that. So this notification says that suppose RBI purchase any car and all, then TCS is not applicable. Because normally you know that TCS is applicable, that section 206C1F, if you purchase any car of the more than 10 lakh rupees motor vehicle, then TCS is applicable at the rate 1%. Now the one power is given to the government has issued one notification and government says that if RBI purchased the car, then this section is not applied. So they notify, that is called notification. So basically notification they issue either to give the effect of the amendment or to notify something. To notify something, they issue the notification. So guys, but notification, always remember, it is binding to the all. It is binding to the all, means it is binding to you as well as it is binding to the department. Means assessee or department cannot say that no, we will not follow the notification. No, you have to follow the notification. Notification is basically binding to the all. It is binding to you as well as it is binding to the department. Like suppose GST rate, they have increased the GST rate from 18 to 20% through the notification. You cannot say that no, we will not follow the 20%, we want that 18%. No, it's not possible. So notification is basically binding to the all. Notification is binding to the all. So there are lots of notification are there. So there are lots of notification are there, like processor here they have issued one notification. This notification is related to it is issued by the Director of Income Tax System Bangalore, CBDT issued the notification, and in notification they have mentioned that how you can apply for direct tax Vivad se Vishwas rules 2024. So they notified the amendment. So this is to give the effect of the amendment, they issue the notification, and notification is binding to all. It is binding to department as well as it is binding to the assessee. So if anyone asks that what is the notification, so notification is basically to give the effect of amendment. Suppose if any amendment is made and in the suppose for an example, in the Income Tax Act, it is mentioned that it may be prescribed, it is applicable from the date it may be notified. So to give the effect of that amendment, they will issue the notification. To give the effect of that amendment, they will give the notification. So notification is means to give the effect of the amendment is a notification. And notification is binding to all. It is binding to the department as well as it is binding to the assessee. You cannot say that no, I will not follow the notification. You have to follow the notification. Now guys, there are certain circular also. Because to understand the income tax law, you have to understand the circulars also. Now what are the circular? What is the meaning of circular? So try to understand. Circular is basically issued by the CBDT. CBDT has the power to issue the circular. But circular is issued just to clarify the certain thing. To give the clarification, if they want to give the clarifications related to something, if they want to clarify, they want to give the clarification, then they issue the circular. And guys, remember, this circular are not binding to the assessee. This circular are basically not binding to the assessee, means assessee, if assessee wants to ignore that, assessee can ignore it. So circular are not binding to assessee, but guys, it is binding to the department. Since department has issued the circular, so circular are binding to the department, but it is not binding to the assessee. So guys, what I am saying that circular are basically issued by CBDT to give certain clarity or to give the clarification, or to suppose for an example, in any provision of the law, there are basically certain, you can say that the certain dispute may arise. Then to give the clarity on that point, department can issue the circular. But circular are not binding to the assessee. If it is favorable to the assessee can opt that circular. But if it is not favorable to the assessee, then assessee can ignore that circular also. So here I can take an example. Circular are basically clarification. So just I am showing you certain circular here. So or on the income tax this website, here circular are given. So guys, if I show you certain circular, so circular is basically to give the clarification or to give the benefits and all, then they issue the circular. So guys, you know that tax audit due date is extended. So tax audit due date is extended by 7 days. So here they issued the circular. So here CBDT, Central Board of Direct Tax, they issued the circular. Okay, you can take the extended date. That extended date is the 7th October 2024. Your tax audit due date was 30th September. They have extended by 7 days. So it is a circular. Just give the clarification. And if you want to follow this, then it's okay. If you don't want to follow, then it's okay. It's favorable for you. So it is a favorable for you. Like this circular is favorable for you. You should follow that. So this is called a circular. Or I can take one more example. Okay, guys, suppose here they have issued one circular is related to the guidelines. So on the guidelines also, they can issue the circular. Suppose in any provision, there is some dispute or some contradictory views are coming, or you have some doubt in mind, then they can issue the circular. So here they issued the circular related to the 194O. 194O section in the TDS is related to the online e-commerce transaction. So in the e-commerce transaction, there was one dispute, or you can say that one clarification was required in case of the ONDC. ONDC means today's, you know that nowadays there is an open network digital platform is there, that is ONDC. So related to that, they have issued some guidelines. So this guidelines or clarification are basically circular. Now, if you wish to follow this circular, then it's okay. If you don't want to follow this circular, then also it is okay. But it is not binding to the assessee. It is binding to the department. It is not binding to the assessee. Guys, now I can take one example of the circular. If you remember, then you know that in your office, suppose one professional fees bill is of 1 lakh. Suppose one client issued one bill of the 1 lakh. And on that 1 lakh, he has added the GST 18,000. So total your bill amount is 1,18,000. Total your bill amount is 1,18,000. Professional fees bill is a 1,18,000 GST. Total is 1,18,000. Now guys, on the professional fees, you know that like your chartered accountant issued the bill to the client. Now client made the payment. So client has to deduct the TDS. But if you remember, then you know that TDS on GST is not applicable. Means on GST, if you not deduct the TDS, then it's okay. So suppose on this GST component, on this GST component, there is no TDS. So your client will deduct the TDS, means chartered accountant issued the bill of 1 lakh plus 18% is GST. Total is 1,18,000. Now client will deduct the TDS on the 1 lakh. So TDS is applicable under section 194J at the rate 10% on the 1 lakh, that is the 10,000. So your client will make the payment of 1,08,000 because 1 lakh plus 18,000, that comes to 1,18,000. 10,000 is a TDS, so he deducted TDS on the 1 lakh rupees. Now suppose your client forget this rule and your client deducted TDS on total 1,18,000. So is it wrong? It is wrong to deduct the TDS at the rate 10% on the 1,18,000. Suppose he has deducted the TDS of 11,800. So is it okay or not? Answer is yes, it is okay. No issue at all. Guys, no issue at all because TDS is not applicable on GST. This is one circular is issued by CBDT. Now it is a favorable circular. If you want to follow this circular, you can follow it. And if you don't want to follow that circular, it's okay. No problem. Don't follow that circular. So guys, what I am saying that circular are basically issued by the CBDT. That is for give the clarification or give the clarity or give some guidelines related to some provision. If there is any ambiguity or just give to benefit to the assessee, they issue the circular. Now circular are not binding to assessee, it is binding to the department. But if any circular which are favorable to the assessee, obviously assessee can follow that circular. Assessee can follow that circular. There is no issue at all. Okay. Now one more point. Guys, to understand the income tax law, you should understand the case laws also. There are various case laws. Now, the case laws are either of High Court case laws or Supreme Court case laws. In our syllabus, that ITET case law or CIT case laws are not covered, obviously. Now guys, this high court judgment are basically binding, or I can say that applicable for the jurisdiction of that high court. Means suppose for an example, you are in the Chennai, then there is a Madras High Court. So Madras High Court judgment is applicable only in the Tamil Nadu. It is not applicable in the Mumbai. It is not applicable in the Punjab. But Madras High Court judgment is there, then that judgment is applicable in the Tamil Nadu. Rajasthan High Court judgment is applicable in the Rajasthan. Bombay High Court judgment is applicable in Maharashtra. So normally what happened, like the judgment of High Court is applicable only in that particular territory of that High Court. Suppose there is a Telangana and Andhra Pradesh High Court. So Telangana and Andhra Pradesh, both states have the one High Court. So Telangana Andhra Pradesh High Court judgment is applicable to Telangana as well as Andhra Pradesh. Punjab and Haryana is having the one High Court. So Punjab and Haryana High Court judgment is applicable to the Punjab as well as the Haryana. So High Court judgment are basically applicable only in the territory of that High Court. But guys, the Supreme Court judgment are applicable for all India, means whole India. If any Supreme Court judgment came, then you have to follow that judgment. You cannot say that, no, sir, I will not follow that judgment and all. You have to follow that judgment. So Supreme Court judgment is binding, and Supreme Court is also known as the apex court. So Supreme Court is also known as the apex court. In your syllabus, there are mostly 90% judgment is from Supreme Court only. But guys, some judgment from High Court also included by ICI if there are some landmark judgment. Landmark judgment means that judgment gives certain, like you can say that the great certainty. That judgment is known as the landmark judgment. If you remember from your intermediate, you know that there was one judgment related to Manjula J. Shah. And Manjula J. Shah judgment says that suppose if you received gift of any property, then you can take the indexation from the previous owner. That judgment is from the Bombay High Court. But that judgment is a landmark judgment. That judgment is very logical judgment. So this judgment is followed by everyone in the India. Normally, Manjula J. Shah judgment should be applicable only for the Maharashtra because it is from Bombay High Court. But that is a landmark judgment, so you can follow it. You can follow even in the Tamil Nadu, no issue at all. That is Manjula J. Shah is a landmark judgment. So in our syllabus, guys, ICI has included your Supreme Court judgment and some judgment from the High Court also. If that is the landmark judgment, then landmark judgment is included by our ICI in our syllabus that we will discuss with the topic. We will discuss with the different topic. Okay, done. Now guys, next part. Okay, now there is one question. Okay. Chirag asked one question. Notification has to be get approved from upper house, lower house and extend from President of India. Answer is no. No. But if it is specifically given there, suppose in that section only if it is given, it will be notified from so and so date, and that notification has to be get the passed by the upper and lower house, then it has to be passed through the upper house, lower house after that notification. But otherwise there is no need to pass that notification through the parliament. Okay, now but can't we mention other state case law for reference? Yeah, reference Nitya, you can do it. I mentioned like Manjula J. Shah case law, that is the Bombay High Court judgment. But Bombay High Court judgment, but that is the very favorable judgment, or it is a landmark judgment. So you can use it even in the Tamil Nadu or Kerala. Okay, done. So guys, to get the knowledge of the income tax income tax law, you should have knowledge of Income Tax Act 1961, Income Tax Rules 1962, Finance Act 2024, notification, circular and case laws. Okay. Now remember guys, we have discussed about the previous year and assessment year. Previous year means year in which you earn the income, that is called previous year. Assessment year is a year in which you pay the taxes, that is called assessment year. But guys, normally you earn the income in the previous year. Normally you earn income in previous year. Previous year you earn the income and you pay the taxes in assessment year, means tax paid. Or you can say that you will file your return of income. File your return of income in the assessment year. So in assessment year, you will file your return, you will pay your taxes. But guys, there are certain exceptional cases. And that exceptional cases says that the normal rule is that whatever income you earn in previous year, you will pay the taxes in the assessment year. You will file your return in the assessment year. Means assessment will be done in the assessment year. But guys, there are some exceptional cases where you earn the income in the previous year, and guys, you have to file the return in previous year itself. Means you have to file the return in previous year itself. Means your assessment year previous year remains same. So here what happened? Okay, there are certain exceptional cases where you earn the income in previous year and you pay the taxes in previous year itself. You file the return in previous year itself. So these are certain 5-6 exceptional cases that we will discuss. In detail, we will discuss with the respective topic, but today is the basic lecture. So I am just going to discuss some like instances where you have to pay the taxes in previous year only and you have to file the return also in previous year. Guys, first case is there is a one section 172. There is a one section 172. This 172 section we will discuss in the PGBP also. So just focus here. 172. What happened in 172? Guys, this is India, and in India, here it is a Sri Lanka. Sri Lanka, India. Now in India, guys, for an example, there is one person from USA, Mr. Sam. There is one person from USA, that is Mr. Sam, is person from USA. Now Sam is having one ship. Sam is having one ship. So Sam is non-resident and this is the ship. Sam is having the ship. Owned by the Sam. Sam is non-resident. Now what happened? Sam came to India, and suppose here on the Indian port, suppose here it is just an indicative map. Suppose here is a Chennai. Now sir, Chennai is this side. Now why you are drawing this? This is just an example. So suppose here it is a Chennai. So this ship came to Indian port. Now this ship is in India, and guys, here there will be a loading on this ship. Means all the goods and passenger will be loaded on this ship. Goods, passenger loaded on this particular ship. Now section 172 says that whenever any non-resident, Mr. Sam, is engaged in the shipping business, and when he came to India, his ship came to India, and if there is a loading of goods or passenger like shipped at any Indian port, then in India he has to pay some taxes. He has to file return at that time only, and only after filing the return, only after paying the taxes, we will allow to depart that ship from the Indian port. Means entry outward will be given to this ship only when this non-resident will pay the taxes in India. Because guys, we don't have trust on this person. Suppose this ship came to Indian port, goods and passenger are loaded in India, it means income has earned in India. Income has earned in India because goods and passenger and all, if they are boarded from Indian port, goods are loaded from Indian port, means it is shipped from Indian port, means you have earned the freight income, and that freight income should be taxable in India. But we don't trust you, because again you will come back to India or not, we don't know na. Because again this non-resident will be come back to India or not, we don't know. Assessment year he will file the return in India or no, we don't know. So what we do, we says that whatever goods you have loaded here on the Indian port, and for that goods, whatever freight you have collected, so whatever freight charges you have collected, on that freight charges, your 7.5% will be the income. On freight charges, your PGBP income will be 7.5%, and guys, on that 7.5%, you have to pay the taxes at the rate 35%. Here tax rate is 35%, means whatever tax rate applicable for foreign company. So as of now, today foreign company tax rate is 35%. So at the rate 35%, that person has to pay the tax in India. And if that person pay the tax in India, then only we will allow to leave the Indian port. Otherwise we will not allow that ship to leave the Indian port. So there is a one section 172. 172 says that whenever like any non-resident engaged in the shipping business, and when he came to India, and on the Indian port some goods are loaded or passenger are board, and you have received any amount, means you have received the freight and all. So guys, whatever amount you received, on that 7.5% will be your income, and on that 35% tax you have to pay. So in the previous year itself, and you know that on the every Indian port there is an income tax department. Like Mumbai port, in Mumbai there is a port, in the Chennai there is a port. So on the port there is an income tax department, there is bank also. So they will ask you to file the return and just pay the taxes in the bank, and only after filing the return and paying the taxes they will allow you to leave the Indian port. So here this is the exception, because normally what happens, you pay the taxes and file the return in the assessment year, but in this particular case you have to pay the taxes in the previous year itself, you have to file the return in the previous year itself. So this is the exceptional case. Now guys, this is the mandatory section, but there are certain more instances where assessing officer may ask you to file the return in the previous year itself. So there are some other cases also where assessing officer may ask you to file the return in previous year itself. They will not wait till the assessment year. In which cases? Section 174. There is a section 174, and section 174 says that suppose if any person is leaving India permanently, if any person, that person is living India permanently in the previous year. So for an example, I can take an example of Vijay Mallya. So suppose Vijay Mallya is about to leave India, and suppose Vijay Mallya is leaving India on the 10th December 2024. Then income tax department, AO may ask him, Vijay Mallya, I know that you are not going to come back again to India. So whatever income you have earned in the previous year, just file the return now only. But this is only when AO appears, when it appears to the AO. So where it appears to the AO that any individual may leave India and he has no intention of returning, then the income of such individual for the period up to the probable date of his departure from India is charged to tax in the current year only. Means they will ask you to file the return and pay the taxes in the previous year itself. Now, one more section is a 174A, that is says that if AOP, BOI or artificial juridical person formed for a particular event or a purpose. I can take an example. Suppose just Dandiya completed. So suppose Dandiya Navratra completed. So in the Mumbai, suppose we have there are 10 people. So by 10 people decided that in Dandiya festival, we will sail the Dandiya, we will sail the water bottle. So we started the business, but this business is only for 10 days. This business is only for the 9-10 days. 9-10 days we will sail the ice cream, we will sail the water, we will sail the the Dandiya and all. So we are doing this business for 10 days. So we have created the AOP BOI or artificial juridical person. So we have created the AOP BOI artificial juridical person. Now what is the AOP BOI? We will discuss later, but try to understand. If we have created that and we have dissolved that, means after that 10 days event, there is no AOP BOI, we just dissolve that. Then guys, income tax department has the power. Means AO can ask you to file the return in the current year only. AO can ask you to file the return in the current year only and pay the taxes in current year. He will not wait till the assessment year. So what this point says that? Suppose AO, that AOP BOI is likely to dissolve in the same year. So here it appears to the AO that it is dissolved in the same year. He can make the assessment of income up to the date of dissolution as income of the current year. Now guys, there is one more section, section 175. Section 175 says that suppose a person is likely to transfer the property to avoid the taxes. A person is likely to transfer the property to avoid the taxes. I can take an example. Okay guys, suppose there is one person, name is Anil Ambani. Now, suppose Anil Ambani has earned some income. Anil Ambani has earned some income in the previous year 24-25. He is earning some income. But it appears to the income tax department AO that Anil Ambani may file the insolvency. Anil Ambani may file the insolvency and that person may be the insolvent. That person may become the insolvent. So Anil Ambani, his financial health is not good. He may file the insolvency and he can declare himself as insolvent. And after insolvent, obviously no one will take the taxes or money and nothing is possible. Now guys, here what happened? Anil Ambani may declare himself as an insolvent in future. So it appears to income tax department now what Anil Ambani is doing, he is transferring his property to his relative or any other person. So what he is doing, he is transferring all the asset to either his son or his daughter or his wife or his near and dear people and all. and it is appears to the income tax department that person will not pay the tax in assessment year, because before assessment year he may declare himself as insolvent. So in this particular case, because here the person is likely to transfer the property to avoid the tax and all, so here if it is appears to the AO that a person is likely to charge, either he will create the charge, or he will sell, or he will transfer, or he will dispose of his asset to avoid the payment of any liability, because in assessment year suppose that person became the insolvent and he don't have any asset at all, so government cannot recover the taxes. So in this case, the total income of such person charged to tax in the current year itself, it may be possibility that income tax department ask Anil Ambani to file the return in previous year itself, pay the taxes in previous year itself. It is possible. Answer is yes. Now guys, suppose section 176 says that discontinued business. Discontinued business means suppose there is a one business from last 10 years, but in the current year that business is discontinued. That business is discontinued. In this particular case, if it is appear to AO and AO want, then AO can ask you to file the return in previous year itself. Now this is not a standard rule, but here it is only if it is appears to AO, or if AO says that it is a discretion power of the AO. Means AO has the choice. AO can ask you to file the return in previous year itself. So what this point says that where any business or profession is discontinued, the income of the period up to the date of such discontinuance may, at the discretion of the AO, be charged to tax in the current year. So guys, we have discussed here 5 points, section 172, 174, 4A, 5 and 176. Now 172, this section was a mandatory section. Means non-resident comes to India and shipping business, he has to pay the tax. That is a mandatory section. But guys, this last 4 point, section 174, that person about to leave India for permanent settlement, or AOP BOI form and it is for particular event and that event is completed, or person likely to transfer his asset or create the charge or to sell that asset or dispose the asset to avoid the tax liability and all, and discontinued business. So guys, in this 4 cases, only if it is appears to AO, then AO can ask you to pay the taxes and file the return in previous year itself. Otherwise, normally you earn the income in previous year and pay the taxes in the assessment year. You got my point or not? Yes. Now guys, in income tax, there are total 7 person. Like this person, like you know that there is a one assessee. Every time we will say assessee, assessee, assessee. What do you mean by assessee? So assessee means a person who is required to pay the taxes. Assessee means a person who is liable to pay tax or any other sum under the Income Tax Act 1961. And it includes the person in respect of which any proceeding is initiated, or deemed assessee or assessee in default. I will explain you what is this. Guys, assessee means a person who required to pay any taxes or any sum under the income tax law. So person liable to pay tax. Liable to pay tax means I pay the taxes to the government. I pay the income tax, so I am a assessee. Or any other sum. Any other sum means suppose you are not paying the taxes, but suppose some penalty is charged by the income tax department. Income tax department impose certain penalty on you, so you require to pay that sum, penalty sum, so you will become also assessee. So assessee means any person who is required to pay the income tax or required to pay any sum under the Income Tax Act. That person is known as the assessee. Now guys, question is that what do you mean by person? So person you already studied in your intermediate also. Person means first is your individual is a person. So person includes, one is the individual. Individual means a natural person. Man, woman, minor person. If any person is of the unsound mind, that is called person. So person include first is the individual. Individual means the natural person. I am the individual. You are also individual. Your friend is also individual. So individual means a natural human being is an individual. Now question is that, sir, is third gender will also covered in the individual? Answer is yes. Third gender also covered in the individual. Is minor also covered in the individual? Answer is yes. Minor also covered in the individual. So we all are the individual. So individual is a person. Now second is a HUF. HUF means Hindu Undivided Family. So Hindu Undivided Family, in Income Tax Act, they have not defined about the HUF. In Income Tax Act, they just mentioned that Hindu Undivided Family. But guys, in the Hindu law, they have defined the HUF. HUF means suppose there is a like husband and wife, and if any child birth is there, So guys, that family is known as the HUF. And HUF is having the separate legal status. HUF is having the separate legal status, and that HUF can opt for the PAN number. HUF can do the business and all. In the practical life, what happened, guys? In the earlier, like a year, 50, 60 years ago in India, that family businesses was there. So that family business is known as the HUF business. But nowadays, there is no HUF in the offices and all. You know that people create the HUF only to just take the benefit of that 2,50,000 or 3 lakh basic exemption. Only to take the benefit of that 2,50,000 or 3 lakh, people used to create the HUF. But in the practical life, there is no, like, why people create the HUF nowadays. They can create the like a partnership firm or company or AOP BOI or like individual, they can do the business. So in the practical life today, HUF is created only to just take the tax benefit. And guys, if new tax law comes now, then I think there will not be a concept of HUF. So if new tax law comes and if government introduce the direct tax code or new tax law, then they will remove that HUF status, because like nowadays there is no HUF at all. Nowadays, like, people are creating HUF only to take the tax benefit, but nowadays there is no family business and all. But as per the law, like as per the Hindu law, HUF is treated as a separate entity. In income tax also, we have given the separate status to the HUF. Now, sir, can like only HUF can be created by Hindus? Answer is yes. Can Muslim create the HUF? Answer is no. Can like Catholic create the HUF? Answer is no. But Jain family and Sikh family can create the HUF because they are from the Hindu only. They are Hindu only. So Jain family and Sikh family can create the HUF. Now guys, for the examination purpose, it is not relevant. You should explain what do you mean by HUF. Now next part is a company. So in income tax, any company means any body corporate which is incorporated in India or incorporated outside India. So even any company incorporated in foreign country, that is also known as the company. Now there is a firm. And guys, remember, firm always include the LLP. In income tax law, there is no difference between firm and LLP. Whatever provision applicable to firm, that same provision are applicable to LLP also. So wherever firm is written now, always assume it includes the LLP also. So firm and LLP is a person. After that, association of person and body of individual, that is AOP BOI. AOP BOI always we like, you know that we always mention together only. AOP BOI, association of person, body of individual, because both are similar. Now, association of person and body of individual means, suppose some person came together for a specific objective and they have not created a company or they have not created the partnership firm and all, then that is known as the AOP BOI. For an example, a joint venture. So suppose 5-6 people came together and they started the joint venture, that is known as the AOP BOI. Or we have started one business in the Dandiya, we have not created the partnership firm, or we have not created the company, then it is known as the AOP BOI. So association of person and body of individual means some people came together for the specific reason, that is known as the AOP BOI. Now guys, in the intermediate, you also studied that there is a little bit difference between AOP and BOI. What is that difference? The difference is, in AOP, any person can become the member. Association of person means any person can become the member. So suppose two companies came together and they have created the joint venture, it is a AOP. Or suppose there are 3 people, one is the company and 2 individuals, they created, that is AOP. But in the BOI, only individual person can came together and can become the member. So if any person can become the member, then it is a AOP, but sirf only individual can become the member, then it is a BOI. So body of individual, only individual person can come together and become the member, that is the BOI. But in the income tax, guys, in whole income tax, AOP BOI always we talk together only, because for both the AOP BOI tax rate is same, exemption is same, everything is same for AOP BOI. So wherever AOP is written, it is included, it is BOI also. So AOP BOI. After that, local authority. Local authority means your municipality or gram panchayat, or like example is like Bombay municipality, Chennai municipality, Madras municipal corporation. So that municipality is your local authority. And last is an artificial juridical person. If anything is not covered in the above 6%, that person is known as the artificial juridical person, like a temple, that is deity. Like Tirupati Balaji Trust, that is covered as the artificial juridical person. Or bar council, or a university, colleges, that is covered in the artificial juridical person. So guys, there are 7% individual HUF AOPBY, company, partnership firm, local authority, and artificial juridical person. So if any person required to pay the tax or any other sum under the income tax law, that person is known as the assessee. That person is known as the assessee. Now remember, all assessees are person, because all the assessees are person now, but all persons are not assessee. Because you are the person and you are not paying the taxes. Suppose you are not filing your return, then you are only person, but you are not assessee. But I am the assessee as well as the person. So every assessee is the person, but every person is not assessee. So every assessee is the person, but every person is not assessee, means only person who required to pay the tax or any other sum under income tax law, that only treated as the assessee. You got my point or not? Yes. So this is the completion of your this part, person. Okay. Is there any doubt? Now Harsha asking one question, sir, trust will be covered in AOPBY or it will be covered in the normally so you know that for trust there are separate tax rate, but suppose trust is not registered. If trust is unregistered trust, then it will be covered as a AOPBY. If there is an unregistered trust, for an example, there are 5-6 trustees and they created one trust and that trust is not registered, then it is taxed as a AOPBY. It will covered in AOPBY and it is taxed like a AOPBY only. Okay. So trust will be covered as AOPBY. Trust is covered as AOPBY. Yes. Okay. Whoa. In the last part I mentioned when it is appears to AO means if AO think that. If there is a power of discretionary power of AO, okay, AO feel that okay, this person is living in India and that person is not going to come back to India. In that particular case, he may ask the assessee to file the return in the previous year itself. Okay, done. So guys, this is the point number, page number 1 and page number 2. Now we are going to take break for the 10 minutes. After 10 minutes, we'll start with the tax rate. So I'm giving you break today little early. Just read whatever given in the page number 1 and page number 2. So on the page number 1 and page number 2. Okay, now he is asking, sir, trust, just ignored for some time for the trust. Trust will be covered in the artificial juridical person or it is a AOPBY. Normally it is a AOPBY, Shashank. Normally it is a AOPBY. Trust is covered as a AOP, like Tirupati Balaji Trust. That is covered as AOPBY. But we'll discuss in that separate topic. You will get it. Don't worry about that. Okay. Now here, if you receive the book, then guys, I think here date is not written. If date is not written, then just write it 16 August 2024. That Finance Act 2024 is received assent of the President on this date, 16 August 2024. If you receive the book, then just write it. Not received, then it's okay. I will show you when you receive the book. Okay. Done. Now take a 10 minutes break. And after 10 minutes, we'll start with some practical part, tax rate and all. We will discuss about the tax rate. Okay, what are the tax rate for your examination? So, 10 minutes break. Yes, people. Done with your break. Harsha, trust is always AOPBY. Just remember, trust is a AOPBY. Okay. Trust is AOPBY. Whether it is registered or unregistered, like what happened for the trust, there is a slab rate, but suppose if trust is unregistered, then we tax at MMR. We will discuss in the AOPBY topic, okay? Now guys, today we are going to start with one very interesting part, that is tax rate for your examination. So we are going to start with the tax rate for assessment year 25-26, or I can say that assessment year 24-25. So tax rate for assessment year 25-26, or I can say that previous year 24-25. So previous year 24-25 is applicable for your examination, assessment year 25-26. Now what are the tax rates? So guys, there are two types of the tax rate. One is the general tax rate and one is the special tax rate. So there is one is the general tax rate. General tax rate means slab rate and all, that is general tax rate. And one is the special tax rate. Special tax rate. Special tax rates. Now guys, general tax rate are basically provided in Finance Act. So general tax rate are mentioned in Finance Act 2024. That is slab rate. General tax rate is a slab rate. and some are special tax rate. Special tax rate are given in the Income Tax Act 1961. 1961. So special tax rate are given in the Income Tax Act 1961. So what I mentioned, try to understand. Two type of the tax rate. One is the general tax rate, one is the special tax rate. General tax rate are given in the Finance Act 2024 and special tax rate are basically provided in the Income Tax Act 1961. Now what are the special tax rate? So guys, in the special tax rate, we will discuss certain special tax rate today. One is the long-term capital gain. Long-term capital gain means normal long-term capital gain under section 112. So long-term capital gain under section 112, earlier it was taxable at the rate 20%. Means here tax rate is 20% if transfer of asset, if transfer took place up to 22nd July 2023, that is before budget. This time there are lots of amendment in the capital gain and especially related to the tax rate. So in case of the long-term capital gain, if that long-term capital asset was transferred before 23rd of July 2024, before 23rd of July 2024. So if this asset is transferred up to 22nd of July 2024, or I can say that before also, like that is if asset transfer took place before 23rd July 2024, then your tax rate is at 20%. So in case of the long-term capital gain, if transfer is took place before 23rd July 2024, then your tax rate is 20%. But guys, now this tax rate is changed. And now if transfer took place on or after 23rd July 2024, then your tax rate is 12.5%. So 12.5% is tax rate if transfer on or after 23rd of July 2024. So if transfer took place on or after 23rd July 2024, then tax rate is at 12.5%. Earlier that tax rate was 20%. So now question is that, sir, we have to remember both the tax rate? Answer is yes, guys. This year you have to remember both the tax rate because for your examination previous year 24-25 is applicable. So if transfer took place before 23rd of July 2024, then tax rate is 20% in case of long-term capital gain. And if transfer took place on or after 23rd of July 2024, then tax rate is 12.5%. Now guys, next is in case of the long-term capital gain under section 112A. So this long-term capital gain under section 112A, if you remember, then you know that this long-term capital gain under section 112A is applicable in case of the equity shares. So if you transfer the equity shares, or if you transfer the equity oriented mutual fund unit, or if you transfer the unit of business trust. Yesterday we have discussed that Embassy Office Park, that is business trust. So guys, if you transfer the equity shares or equity oriented mutual fund units or units of business trust, then long-term capital gain is taxable under section 112A. Now this long-term capital gain, earlier the tax rate was 10%. Means if this asset, equity shares and all, if it got transfer before 23rd of July 2024, then guys, earlier this tax rate was 10%. But you know that in the share market, Nirmala Sitharaman ji, you know that increase the tax rate. Everyone is saying that now Nirmala Sitharaman ji increase the tax rate in the share market transaction. So here, if there is a transfer and the transfer took place on or after 23rd of July 2024, then your tax rate is 12.5%. Then your tax rate is 12.5%. So here, guys, pay attention. Long-term capital gain under section 112A, that is on equity share or equity oriented mutual fund or unit of business trust. Long-term capital gain, earlier it is used to be taxed at the rate 10%, but now tax rate is 12.5%. So now it is taxable at the rate 12.5%. But guys, you remember this long-term capital gain under section 112A, it was supposed to tax at the rate 10% in excess of the 1 lakh rupees. Means up to the 1 lakh rupees, long-term capital gain is not taxable. Up to the 1 lakh rupees, that long-term capital gain is not taxable. But guys, now this limit has been increased from 1 lakh to 1,25,000. And this limit is increased for whole year. Huh? This limit is increased for whole year. It means now this 10% and 12.5% is applicable, but it is in excess of rupees 1,25,000. So suppose if there is a long-term capital gain under section 112A, then guys, if you transfer before 23rd July, then tax rate was 10%. If you transfer on or after 23rd July 2024, then tax rate is 12.5%. But guys, this tax is applicable only in excess of 1,25,000. Now your question may be like that, sir, you are saying that before 23rd July 2024, tax rate was 10%. Answer is yes. Sir, suppose, for an example, there is a one person, Mr. Raj. Raj sold some share, and suppose he sold on the 16th of July 2024, and on 16th of July 2024 from the share market there is a LTCG under section 112A, and suppose LTCG is a 4 lakh rupees. 4 lakh rupees is LTCG. Now question is that sir, this 1,25,000 benefit is available or 1 lakh benefit is available, because here tax rate is a 10%. Na? Because if it is got transferred before 23rd of July 2024, so it transferred before 23rd of July 2024. So tax rate is 10%, but sir, here it has to be taxed at the rate 10% in excess of 1 lakh or 1,25,000. Right answer is 1,25,000. This limit of 1,25,000 is increased for whole year, means in excess of the 1,25,000. So remaining is 2,75,000. On that 10% taxes, on that 10% tax is applicable. Yes. So transfer took place before 23rd July 2024, then tax rate is 10%. It is transfer on or after 23rd July 2024, then tax rate is 12.5%. But guys, this tax is charged only in excess of 1,25,000, and this 1,25,000 limit is applicable for all the long-term capital gain, even it is accrued before or after this particular date. So in total, in excess of 1,25,000 is going to be taxable at the rate 10% or 12.5%. You got my point or not? Yes. So we are discussing about some special tax rate. So guys, special tax rate we will discuss in detail in capital gain also. Okay, sir, what is the meaning of long-term capital gain 112? What is the meaning of long-term capital gain 112? Is STT is required to pay and all that we will discuss in the capital gain topic. Here, this is just a brief profile, brief of tax rate. So LTCG, normal long-term capital gain, if transfer took place before 23rd July 2024, tax rate is 20%. If it is transfer on or after 23rd July 2024, then 12.5%. LTCG under section 112A, that is equity share, equity oriented mutual fund units of business trust. Guys, before 23rd July 2024, 10% was tax rate. Now it is at 12.5%, but in excess of 1,25,000. And this 1,25,000 limit is applicable for whole year. Huh? So for the whole year, whatever your capital gain, on that capital gain, reduce the 1,25,000, remaining capital gain. If it was transferred before, then apply the 10%. If it is transferred after, then apply the 12.5%. But now there may be one question in your mind, okay, sir, this 1,25,000 we will reduce first again, this or this, means there may be one question. Try to understand. Guys, suppose for an example, I am having the long-term capital gain on transfer of certain shares, and date is 15 May 2024. Suppose there is a 50,000 rupees long-term capital gain. Now, again on the 19th of July 2024, there is a 1 lakh capital gain. Again on the 12th December 2024, there is a 1,50,000 capital gain. And guys, on the 14th of Feb 2025, there is a, again suppose 50,000 capital gain, long-term capital gain. So total is a 50,000, 1,50,000, 3 lakh, 3,50,000. So here it comes to the 3,50,000. 3,50,000, 3,50,000. So guys, on the 3,50,000, out of 3,50,000, obviously 1,25,000, there is no need to pay the tax. 1,25,000, there is no need to pay the tax. So 3,50,000 minus 1,25,000, it comes to the 2,25,000. Now guys, on 2,25,000 tax is applicable. But sir, 125 we will set up like capital gain which is taxable at 10% or capital gain it is taxable at 12.5%, because this capital gain is after 23rd July and this is before 23rd July. So sir, I should reduce this 1,25,000 limit here or here. Guys, as of now there is no clarity. As of now there is no clarity that 1,25,000 you will adjust against capital gain accrued before 23rd July, but total obviously 125. But you will adjust again this before capital gain or after that amendment capital gain. That clarity is not there as of now. But I feel when nothing is given, then there may be possibility that you will set up this 1,25,000 against this capital gain because it is chargeable at 12.5%, and you will show here like you will pay the tax at the rate 10%. So there may be one possibility. Or second possibility, you have to follow the FIFO method. Suppose if you follow the FIFO method, then obviously you have to adjust against this capital gain. So as of now, there is no clarity. There may be possibility that at the time of filing of return in the next year, there may be possibility at the time of filing of return, they issue the clarification on that, how this capital gain will, how this limit of 1,25,000 will be adjusted. But as of now, nothing is given. As of now, nothing is given. As of now, they have not given sir how it will be adjusted. Means first it will be adjusted against capital gain before or after capital gain. That is not mentioned. So if nothing is given, then I can say that I will take the more beneficial view for the assessee. So more beneficial view is like first I will adjust against this because it is chargeable at 12.5% and it is chargeable only at the rate 10%. So first I will adjust against this 12.5% and remaining if there is like 1,25,000 I will adjust here. And on the remaining, I will pay the 12.5% and here I will pay the 10%. So if nothing is given, there is no clearly anything is given in the law, then I can take whatever more beneficial for me. Now guys, one more special rate of section is the section 111A. And 111A is related to the short-term capital gain. Guys, if there is a short-term capital gain on the equity shares or equity oriented mutual fund units, means short-term capital gain on the equity shares or equity oriented mutual fund unit or unit of business trust, then how it is taxable? Here before the amendment, earlier the tax rate was the 15%. Earlier the tax rate was the 15%, means on the equity share or equity oriented mutual fund, if there is a short-term capital gain, earlier it was taxable at the rate 15%, but guys now it is taxable at the rate 20%. Now tax rate has been changed to 20%, so 15 to 20%. So that is also unfavorable for the assessee because earlier the tax rate was 15% and now that tax rate is at 20%. So earlier it was 15%, now that tax rate is 20%. So people are not happy with Nirmala Sitharaman ji from share market. We put in the IPO. So always you put in the IPO, and IPO you earn the money, and suppose you sold the IPO within 1 year, then obviously there will be a short-term capital gain, and nowadays we sell on the second day only. So there is a short-term capital gain. Earlier it used to be taxable at the rate 15%, but now it is taxable at the rate 20%. Now it is taxable at the rate 20%. So we have discussed the three special rates. So special rate we have discussed. First is a long-term capital gain. Long-term capital gain means normal long-term capital gain. So guys, in the normal long-term capital gain, normal long-term capital gain means long-term capital gain on the transfer of the house property or any debenture bonds or any jewelry and all. This long-term capital gain is taxable under section 112. Earlier tax rate was 20%, but now from this date, this tax rate reduced to 12.5%. This may be a beneficial for the assessee, but they have removed the indexation benefit and all that we will discuss in the capital gain. Now LTCG 112A, that is equity share, equity oriented mutual fund, unit of business trust, there is long-term capital gain. Then guys, earlier it used to be taxable at the rate 10%. Now it is taxable at the rate 12.5%, but in excess of the 1,25,000. So in excess of the 1,25,000. Now there is a short-term capital gain on equity share or equity oriented mutual fund or unit of business trust. Earlier it is used to be taxable at the rate 15%, but from the date of budget 23rd July 2024, now it is taxable at the rate 20%. Means if transfer took place on or after this date, then it is taxable at the rate 20%. Now guys, there are some other special rate also. There are various special rate that we will discuss slowly. One special rate, if you remember from your intermediate, we have discussed one section 115BB, that is TDS on winning. So TDS on winning, there is one more special tax rate is a 115BBG. BBG or it is a BBJ, I think. There is a one more special rate is a BBJ. Now this is from the winning. Winning from lottery, crossword, puzzles, game show, card game, online gaming. Online gaming means Dream 11, My 11 Circle, that Jungly Rummy, that online gaming. So now it is taxable at the rate 30%. So this is also one special tax rate. So a special tax rate under section 115BB, 115BBJ, that is winning is taxable at the rate 30%. Now guys, we will discuss certain more special tax rate. There are certain alternative tax regime, that is section 115BAA. For company, there is a tax rate of 22%. If domestic company is engaged in the manufacturing business, then there is a section 115BAB. So if manufacturing business, then there is a BAB, tax rate is 15%. We will discuss in the later part. Suppose there is a 115BAC, then for individual, default taxation regime, individual have to pay the tax at the different slab rate and all. So that we will discuss in the special tax rate. So guys, just we have discussed the three special tax rate. Try to understand long-term capital gain normally. Normal long-term capital gain. If transfer took place before 23rd of July 2024, it is taxable at the rate 20%. On or after 23rd July 2024, it is taxable as per 12.5%. Long-term capital gain under section 112A, if transfer took place before this date, 10%. On or after this date, then 12.5%. And guys, it is taxable in excess of 1,25,000. Short-term capital gain from share market, earlier tax rate was 15%. Transfer on or after this date, then tax rate is 20%. Now guys, today we will discuss about the general tax rate. This three special tax rate, just I have given you the one brief about the special tax rate. Today we will discuss about the general tax rate. Now guys, general tax rate, how general tax rate is applicable. So before starting general tax rate, what we are supposed to do in the income tax? So in income tax, we will calculate the total income of the person, total income of the assessee. So how to calculate the total income? Compute total income. Total income is also known as the net taxable income. Total income or net taxable income. Guys, for total income, first take the income from salary. So salary had income. After that, house property had income. After that, PGBP income, capital gain income, income from other sources income. And this total of 5 head of income, this is known as the gross total income. This is known as the gross total income. And from gross total income, you have to claim the deduction under chapter 6A. Suppose some deduction are available, that is under section 80C to 80U. If any deduction is available, just claim that deduction, and after claiming the deduction, whatever your income, that remaining income, it is known as the net taxable income or total income. This is known as your net taxable income or total income. Now guys, always remember, this net taxable income has to be rounded up in the nearest rupees of the 10. Means this net taxable income has to be rounded up in the nearest rupees of 10. Nearest rupees of the 10. You have to round it up. This is given under section 288A. So there is a one section 288A. And section 288A says that whatever your total income or net taxable income, it has to be rounded up in the nearest rupees of 10. Now what do you mean by nearest rupees of 10? Suppose your income is 5,60,512. So 5,60,512. So here nearest 10 rupees is 5,60,510. Because 1, 2, 3, 4, then you have to round it up to the lowest, like you can say that the lower rounded up. And suppose if it is a 5, 6, 7, 8, 9, then upper 10. So here 5,60,000 and 512. So 2 you have to ignore. So here it is a 510. Suppose for an example, here it is a 5,60,515. Then you have to round it up to 5,60,520. And suppose here it is a 5,60,519, then also you have to round it up to 5,60,520. So nearest 10. So if it is a 1, 2, 3, 4, then lower 10. If it is a 5, 6, 7, 8, 9, then upper 10. You have to round it up in the nearest rupees of 10, this net taxable income. So this net taxable income, you have to round it up in the nearest rupees of 10. Now guys, we are going to start with the tax rate of general tax rate, basically how to calculate the general tax rate. And this general tax rates, this tax rates are given in the Finance Act. General tax rate is always given in the Finance Act 2024. A special tax rate is given in the Income Tax Act, but general tax rate given in the Finance Act. Now what are the general tax rate? Pay attention. Guys, first is, in case of individual, HUF, AOP, BOI, and artificial juridical person. So individual, HUF, AOP, BOI, artificial juridical person, there is a slab rate. So on this total income, you have to pay the taxes. So this is the total income or net taxable income. There is a slab rate. Now slab rate here, guys, up to 2,50,000, there is no tax. So in case of individual, HUF, AOP, BOI, artificial juridical person, up to 2,50,000, there is no tax. And guys, this 2,50,000 is basically known as the basic exemption. This 2,50,000 is known as the basic exemption. But in the law, they never write the word basic exemption. In the law, they always write as MANCT. MANCT. MANCT means maximum amount not chargeable to tax. So MANCT means maximum amount not chargeable to tax is called your basic exemption. So this is the basic exemption, but in the Bare Act and in the law, they never write the word basic exemption. In the law, they always write the word maximum amount which is not chargeable to tax. So maximum amount which is not chargeable to tax is a 2,50,000, or we can say it is a basic exemption. So here basic exemption is 2,50,000. So in case of the individual, HUF, AOP, BOI, artificial juridical person, your basic exemption is 2,50,000, means up to 2,50,000 there is no tax. But guys, suppose your total income means your total income is more than 2,50,000 up to 5 lakh rupees, then guys, here tax is applicable at the rate 5%. So total income more than 2,50,000 up to 5 lakh, then tax rate is 5%. Now total income is more than 5 lakh up to 10 lakh rupees, then guys, your tax rate is 20. And if your total income is more than 10 lakh rupees, then your tax rate is 30%. So guys, in case of individual, HUF, AOP, BOI, artificial juridical person. So individual, HUF, AOP, BOI, artificial juridical person, up to 2,50,000, there is no tax, that is basic exemption. 2,50,000 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now, sir, we have seen that there is a different tax rate, sir. We have seen that there is a, sir, up to 3 lakh, there is no tax. 3 lakh to 7 lakh, Nirmala Sitharaman ji mentioned that. 7 lakh to 10 lakh, 10 lakh to 12 lakh, 12 lakh to 15 lakh. But you are teaching, sir, this old tax rate. Still it is applicable? Answer is yes, it is applicable. Whatever you are talking about now, that new slab, new tax rate, that is applicable in case of 115 BAC. Under 115 BAC, if assessee opted 115 BAC, that new taxation regime, then that new tax is applicable. Otherwise, guys, still this old taxation regime or old tax rate is applicable. So in case of the individual, HUF, AOP, BOI, artificial juridical person, if your total income is up to 2,50,000, there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now guys, lawmaker says that suppose if any individual is a senior citizen. Now question is that what do you mean by senior citizen? So senior citizen means, try to understand, senior citizen means resident individual, age 60 years or more in previous year. So senior citizen means resident individual age 60 years or more in previous year, that is called senior citizen. So guys, here in case of senior citizen, lawmaker says that up to 3 lakh there is no tax. So basic exemption is increased to 3 lakh from 2 lakh 50,000. So here it was 2 lakh 50,000. Here it is a 3 lakh. 3 lakh is basic exemption. So in this case, your basic exemption in case of senior citizen is a 3 lakh. But if your income is more than 3 lakh up to 5 lakh, then guys, your tax rate is 5%. If your income is more than 5 lakh up to 10 lakh, then your tax rate is 20%. And guys, if your income is more than 10 lakh, then your tax rate is 30%. So guys, we are talking about the senior citizen. Senior citizen means resident individual age 60 years or more in a previous year. Previous year means your previous year. Previous year means your previous year. So guys, can I say for your examination, your previous year is 24-25. So previous year 24-25 means period from 1st April 2024 till 31st March 2025, that is called your previous year. So in your previous year means between this particular period, if any person has attained the age of the 60 years or more, then that person is known as the senior citizen. So what I'm saying, try to understand here guys, senior citizen means resident individual age 60 years or more in the previous year. Then only that person will be known as senior citizen. Now you have to notice two things here. One is the resident individual. Guys, here I clearly mention the word resident individual. Resident individual. Resident individual means if that person is a resident, then only that person can become the senior citizen. Otherwise, that person is not a senior citizen. Means resident, that person should be resident. That person should be resident. So that person should be resident means, for an example, guys, suppose for an example, you're one of the relative. That person is working in Dubai, suppose. That person is working in Dubai. That person is a non-resident in India because he has not stayed in India for the 182 days or more in the previous year. So he's a non-resident. Now guys, if that person age is even 72 years. Suppose this person age is a 72 years. But he's a non-resident, guys. This person age is, that person is staying in Dubai. He is a non-resident. His age is a 72 years. Then also that person is not a senior citizen. Suppose that person is having any income from India, that person is having any income from India, then tax rate is that 2,50,000 tax rate is applicable. That 3 lakh basic exemption is not available. It means senior citizen, to become the senior citizen, first you should be the resident in India. Resident may be resident and ordinarily resident or resident but not ordinarily resident. It is okay. You are resident. So in intermediate, you know that you heard resident and ordinarily resident, resident but not ordinarily resident. So even is a resident and ordinarily resident or resident but not ordinarily resident, but you are a resident, then you are a senior citizen. If resident individual is having the age of the 60 years or more in the previous year. Now guys, I am saying that if resident individual completed the age of 60 years or more in the previous year, in your previous year, then that person will be treated as senior citizen. Now guys, I can take one example. Try to understand. All people pay attention. So here, all people pay attention. Suppose guys, there is a one person, Mr. Bala. So here is a one person, Mr. Bala. Oh, bhaiya. Focus here, Idhar dekho, Focus here, Mr. Bala. Now what happened? Mr. Bala, suppose Mr. Bala birth date is 1st April 1965. 1st April 1965 was his birth date. So he born on 1st April 1965. Mr. Bala born on 1st April 1965. Now, guys, can I say that he will celebrate his 60th birthday? He will celebrate his 60th birthday. Can I say that he will celebrate his 60th birthday on 1st April 2025? Bala, date of birth is 1st April 1965. So if you calculate 60 years, then he will celebrate his 60th birthday on 1st April 2025. So guys, you used to celebrate your birthday on the date on which your birthday is there. So suppose I born on the 10th December. So every year I celebrate my birthday on the 10th December only. So Bala born on the 1st April 1965. So every year he will celebrate his birthday on the 1st April only. So here guys, Bala birth date was 1st April 1965. He is celebrating his 60th birthday on the 1st April 2025. Now there is a question. Okay, sir, our previous year is 24-25. Means your previous year is 24-25. Means from 1st April 2024 till 31st March 2025. That is your previous year. Now lawmaker says that if any person completed the age of the 60 years or more in the previous year, between this period, then only he is treated as senior citizen. Now guys, Bala is celebrating his birthday here. Bala is celebrating his birthday. He celebrated his birthday on the 1st April 2025. Now there is a question. Okay, sir, when you have complete your particular age on the date of your birthday only or on the last date? Means when Bala has completed the 60 years of age, is Bala completed 60 years of age on the date on which he celebrated his birthday, on that date only, or 60 years of age is completed on the last date, that is 31st March 2025. So guys, if he completed the age of the 60 years on the last date, then I can say that that person is a senior citizen because he has completed the age of 60 years in this year. But suppose if he completed his age of the 60 years on the date on which he celebrated his birthday, then I can say that he has not completed the age of the 60 years in the previous year. So he is not treated as senior citizen. So my question to all of you, guys, in this case, Bala completed the age of 60 years on which date? On the 1st April only, means on the day on which he celebrated cutting the cake, everyone is celebrating happy birthday and all on that day, or on the preceding date. So if on preceding date, then guys, in the current year 60 years of age is completed and he can claim the basic exemption of 3 lakh. Otherwise, he has to take the basic exemption of 2,50,000. So my question to all of you, Bala, in current year, basic exemption is applicable 2,50,000 or 3 lakh? That is the question. Tell me. Don't check into your book, huh? Haji. So here, like when Bala should completed the age of 60 years on the date, means when you complete your age. Suppose you are 20 years old. So 20 years old, you celebrated 20th birthday. So on that day, you completed the particular age, or on the last day, you already completed. And from this day, it is new year is started. So here, guys, here, Chirag bhai, right answer is, guys, this case went till Supreme Court. This case went till Supreme Court, and Supreme Court just explained that how you calculate the period. So for an example, guys, suppose one period is starting from the 15th of July 2024. Suppose one period is starting from the 15th July 2024. then guys, this period will be ended by which date? Means 1 year will be completed when 1 year will be completed. So can I say that normally we calculate the period like this? Okay, from 15 July 2024, if any period is started and you just have to calculate the 1 year, then can I say that on the 14th of July 2024, that 1 year period is completed? So normally how we calculate the period? So how we calculate the period? Suppose one period is starting from the 15th of July 2024 and you have to calculate the 1 year, then normally we take as 14 July 2025. Now 14 July 2025, this is 25. So on 14 July 2025, that 1 year will be completed now. So guys, on the same logic basis, our Supreme Court has given the judgment in one of the case, and after that, our CBDT also issued one circular, and CBDT says that if you are celebrating your birthday on the 1st April 2025, then it is assumed that you have completed the particular age on the last date only, that is 31st March 2025, and here you can claim the higher basic exemption of 3 lakh. So guys, whenever you cut the cake on your birthday, then suppose you are celebrating your 20th birthday. So 20 year is already completed last date. Last date 20 years is already completed, and from this date, means when you are cutting the cake from that day, 21st year is started. So here lawmaker says that, here CBTT basically says that in case if any person is celebrating his 60th birthday on 1st April 2025, it means he has completed already 60 years of age on the last date. He already completed the 60 years of age on the last date, means on the 31st March 2025 only. So he can claim the higher basic exemption in the current year. So in current year, that basic exemption of 3 lakh is available. So now try to understand. We are discussing today about the general tax rate. So general tax rate means in case of individual, HUF, AOP, BOI, artificial juridical person. Up to 2,50,000, there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now, in case of the senior citizen means resident individual, age 60 years or more in the previous year. Age 60 years or more in the previous year, and resident individual up to 3 lakh, there is no tax. 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. So up to 3 lakh, there is no tax. 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. अब एक और चीज समझना guys, एक और कंसेप्ट आता है. नेक्स्ट इज सपोज इफ एनी पर्सन इज अ सुपर सीनियर सिटीजन. सुपर सीनियर सिटीजन. Now super senior citizen means person should be the resident individual, and resident individual age 80 years or more in previous year. So in previous year, if age completed is 80 years or more in previous year, that person is known as the super senior citizen. So resident individual, age 80 years or more in the previous year. So in previous year, if age is 80 years or more in previous year, then guys, here basic exemption is 5 lakh. Means up to 5 lakh, there is no tax. This is called your basic exemption. So your basic exemption is 5 lakh. Now, if your income is more than the 5 lakh up to 10 lakh, then your tax rate is 20%. And your total income is more than 10 lakh, then your tax rate is 30%. So here there is no 5% slab rate. In the last two cases, there was 5% slab rate. Here 250 to 5 lakh 5%. Here 3 lakh to 5 lakh 5%. But here there is no 5% slab rate. Here directly start with the 5 lakh, means more than 5 lakh, it is a 20%. So more than 5 lakh to the 10 lakh, 20%, more than 10 lakh, 30%, that is the slab rate. All people pay attention. So again, I am repeating the general tax rate. So guys, we are discussing about the general tax rate. First is individual, HUF, AOP, BOI, artificial juridical person. Repeat along with me, okay? Just say, okay? So if total income up to 2,50,000, there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now, in case of the senior citizen means resident individual, age 60 years or more in the previous year is called senior citizen. So in case of senior citizen, up to 3 lakh, there is no tax, that is basic exemption. 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Now, in case of the super senior citizen means resident individual age 80 years or more in the previous year. Up to 5 lakh, there is no tax, that is basic exemption. 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. So 5 lakh to 10 lakh, 20%, more than 10 lakh, 30%. Okay, done. Now guys, there is a one concept, it's called surcharge. Now what is the surcharge? All people pay attention. Surcharge means extra tax or extra charge. If any person is earning more income, so if someone is earning, that income more than 50 lakh, then that should be an extra tax. So extra tax is known as the surcharge. So surcharge means there is a tax on tax, means whatever tax you have to pay as per this slab rate. And on that tax, you have to pay certain extra tax also if you are rich people. So suppose you are rich people, I am poor people, but suppose you are rich people, and if you are earning more income, then you have to pay the surcharge also. But surcharge is applicable only if your income is more than 50 lakh rupees. So suppose if any person income, total income is up to 50 lakh only, means up to 50 lakh, then there is no surcharge. If income is up to 50 lakh, suppose my income is a 20 lakh, then there is no surcharge, only that tax is applicable. But guys, if your income is more than 50 lakhs, if your income is more than 50 lakh, up to 50 lakh, up to 1 crore, then guys, surcharge is applicable at the rate 10% of the taxes. Means whatever your tax, on that tax, just add the 10% surcharge. So if your income is up to 50 lakh, then obviously there is no need to pay any surcharge, there is no surcharge. But guys, if your income is more than 50 lakh, when you are earning more than 50 lakh, then our Nirmala Sitharaman ji want more from you. So if your income is more than 50 lakh up to 1 crore, then your surcharge rate is a 10%, means 10% of the taxes, means whatever taxes, on that tax just pay the surcharge at the rate 10%. But suppose if your income is more than 1 crore up to 2 crore rupees, then your surcharge is applicable at the rate 15% of the taxes, means surcharge is applicable at the rate 15% of the taxes. Now guys, suppose if your income is more than 2 crore up to 5 crore, then surcharge is applicable at the rate 25% of the taxes. Means 25% of taxes is the surcharge. And guys, if your income is more than 5 crore, then your surcharge is the 37% of the taxes, means on the taxes 37% surcharge is applicable. So surcharge is not applicable to everyone. It is applicable only to the rich people. So if any person is rich people, so only it is applicable to those people. So if any person is earning, like individual, HUF, AOP, BOI, artificial juridical person, if they are earning income up to 50 lakh, no surcharge. But if income is more than 50 lakh up to 1 crore, surcharge is applicable at the rate 10% of the taxes. If income is more than 1 crore up to 2 crore, surcharge is applicable at the rate 15% of the taxes. If income is more than 2 crore up to 5 crore, then surcharge is applicable at the rate 25% of tax. And guys, if your income is more than 5 crore, you have to pay the surcharge at the rate 37% on the taxes. And guys, after adding the surcharge, there is one cess also. It is known as the health and education cess at the rate 4% on taxes plus surcharge if applicable. So guys, here health and education cess is applicable, and health and education cess is always 4%. And guys, this health and education cess is applicable always it is applicable at the rate 4% on your taxes plus surcharge if applicable. So if surcharge is applicable, then just take the taxes plus surcharge and add health and education cess on the total taxes plus surcharge. Now there may be one question in your mind, yes sir, why Nirmala Sitharaman ji introduce this surcharge? Because Nirmala Sitharaman ji wants more taxes from the person who earn the more income. Now there may be one question in your mind, sir, instead of this surcharge, there may be possibility that they can increase directly slab rate. They must increase the slab rate. Okay, They can increase the slab rate like this. Okay, 2,50,000 to 5 lakh 5%, 5 lakh to 10 lakh 20%, more than 10 lakh. Suppose they increase like 10 lakh to 50 lakh 30%, more than 50 lakh to 1 crore. Suppose it is a 35%. After that, more than 2 crore, that is 39%, 42%. They can increase the slab rate also. But guys, they have not increased the slab rate. Why it is? Because if suppose in the slab rate it is written na, okay, in India you have to pay the tax at the rate 43%, then it directly hurt here if it is written. If it is written, because even you are not having that much income, but if it is written na, okay, in India you have to pay the tax at the rate 43%, then it will hurt here na. It will pinch here. Means you will be not happy with the government. So it is like a condition apply. It is like a condition apply. If your income is more than, then you have to add it also. So practically what happened, like they will say your tax rate is maximum 30%, but it's not maximum 30%. On 30% tax rate, you have to add surcharge also if you are earning more. Guys, suppose if any person is earning the more than 5 crore rupees, then his tax rate is 30% plus surcharge is 37%. Health and education cess is 4%. So guys, here it's a 30% plus 37% plus 4%. It comes to the 42.744%. So approx 43% is tax rate. So you know that government is very chalak. Government is very, like, you know that they are chalak. So what they are doing, they are not directly increase the slab rate. Okay, you have to pay the 43% tax rate. So through the surcharge, if anyone is earning more than 5 crore rupees, then on his taxes, 37% will be surcharge and 4% health and education says always is applicable. Now, one more reason behind that, guys, you know that whatever income tax is collected by our government, like this income tax slab rate, if income tax is collected by our central government, then they have to give some shares to the state. Because income tax, suppose income tax is collected by the central government, but central government will give some share to the states also. So suppose like if income tax is collected from the Tamil Nadu, then they will give some shares to the Tamil Nadu government, the Stalin government. Suppose income tax is collected from the Maharashtra, then some share has to be given to the state government also. So out of the income tax collection, they give some shares to the states also. But guys, from the surcharge, they don't give anything to the any state government. So Nirmala Sitharaman is very minded. Nirmala Sitharaman ji think that okay, if tax rate is increased, slab rate is increased, then we have to share the revenue with the state. But surcharge is a total revenue of our central government, that central government will enjoy this tax. Central government will not distribute the surcharge income to the states. Now guys, question is what is the health and education cess? So guys, health and education cess, our government can charge the cess also. But there is a difference between taxes and cess. This tax and surcharge, they can use for any purpose. Like tax and surcharge, they can use for infrastructure, they can use for education, they can use for the medical purpose, they can use for the any purpose. But guys, this health and education cess, they have to use it for the only health and education. Means this health and education cess is collected by the government, that this has to be spent only for the purpose of health and education. This has to be spent only for the purpose of health and education, means it should not be spent for any other purpose. So that's why it is a cess. Means whenever cess is collected, utilization is fixed. Means it has to be applied only for health and education, not for any other purpose. But guys, this income tax and surcharge can be applied for the any purpose, no issue at all. Now we are taking one example, sir, how to calculate the tax. So all people pay attention. Suppose for an example, there is a one person, that person name is Mr. Mahesh Babu. Mahesh Babu. Mahesh Babu. You know about Mahesh Babu? Okay, just tell me your city name first. Just tell me your city name. You are from which city? So I should know now in which language I have to communicate with you. I should say that Puranzuda, or I should say that Manasalai or Manaslayo. Tell me, you are from which city? Mahesh Babu is from Andhra, I think, right? So suppose Mahesh Babu age is 43 years. Example, Mahesh Babu. Okay, so Hyderabad, Vijayawada, Bangalore, Tirupati, Visakhapatnam, Vijayawada. So all are from Andhra Pradesh, Hyderabad, Andhra Pradesh, Tamil Nadu, Salem, उदयपुर. अरे उदयपुर तूने ये बैच क्यों लिया? तू मॉर्निंग वाला बैच लेना चाहिए ना विशाखा. Why you are attending this batch? For you there is a different batch. It is only for the South Indian student. Kerala, Tamil Nadu, Bangalore. So everyone is from Andhra, Tamil Nadu and Kerala, Tripura. Okay. So Manaslai, you understand Manaslai? Manaslai means? Means Manaslai, then you have to say Manaslai. When I say Manaslai, means you understood or not, then you have to say yes, he understood. वैभवी, तुमको भी हिंदी आता है? अरे हिंदी आता है तो हिंदी वाला बैच लेना चाहिए था तुमको, ये नहीं लेना चाहिए था. चलो कोई बात नहीं, अब क्या बोले तुमको. चलो Manaslai means, तो I will use some word that is only applicable in South. So you will, like many times you will say what you are saying. I will say Puranjuda, I will say Manaslai. So you have to understand those words, okay? Okay, health and education says, yeah, it is used by the central government, but it is distributed to the state government also. That education says and health and education says it is distributed by the central government to the state government also. But this surcharge is only revenue of the central government. This will be used by the central government only. Now guys, try to understand. Suppose there is a one person, name is a Mahesh Babu. Mahesh Babu, age is 43 years. Now guys, Mahesh Babu total income is suppose 1 crore and 50 lakh. Total income is 1 crore and 50 lakh. Now how to calculate the tax on the 1 crore and 50 lakh? So for Mahesh Babu, your total income is 1 crore 50 lakh. How to calculate the tax liability? So guys, up to 2,50,000 there is no tax. Up to 2,50,000 there is no tax. Now more than 2,50,000 up to 5 lakh, the tax is 5%. Now more than 5 lakh up to 10 lakh, your tax is 20%. So here more than 2,50,000 up to 5 lakh, 5% comes to the 12,500. Here it is a 1 lakh rupees. Here it is 1 lakh rupees. Now more than 10 lakh up to 1 crore 50 lakh is 30%. So here 1 crore 50 lakh minus 1 crore 50 lakh minus 10 lakh multiply by 30%, it comes to 42 lakh. So guys, 42 lakh plus 1 lakh plus 12,500. So it comes to the 43 lakh 12,500. 43 lakh 12,500. 43 lakh 12,500. That is the normal tax. Now, is surcharge is applicable? Answer is yes. Surcharge is applicable. Why surcharge is applicable? Why surcharge is applicable? Why surcharge is applicable? Because your income is more than 50 lakh. If your income is up to 50 lakh, there is no surcharge. More than 50 lakh up to 1 crore, 10% surcharge on tax. 1 crore to 2 crore, then 15% of the taxes. So guys, here your income is between 1 crore to 2 crore because income is 1.5 crore. So that is more than 1 crore up to 2 crore. So here surcharge applicable at the rate 15% of the taxes. So here surcharge applicable at the rate 15% of the taxes. So just you have to add here, add surcharge at the rate 15% of the taxes. So here 15% of taxes is your surcharge. So 43 lakh 12,500 multiply by 15%, it comes to the 6 lakh 46,875. So that is your surcharge. So total comes to the 49 lakh 59,375. That is your total including surcharge. Now guys, always you have to add the health and education cess at the rate 4%. So here 4% is health and education cess. So 198,375 and total comes to the 51,57,750. That is your net tax liability. That is your net tax liability. So remember here, how to calculate the tax? Here your income was 1 crore 50 lakh. So on your 1 crore 50 lakh income, first you have calculated tax by the slab rate. So by slab rate you have calculated the tax. By slab rate you have calculated the tax. So here by slab rate you calculated the tax. General tax rate means general slab rate, normal slab rate. That person is not a senior citizen. You added the surcharge here 15% because your income was more than 1 crore up to 2 crore rupees. You have to add the health and education cess here. This is your total tax liability. So guys, now try to understand. I am saying your surcharge is applicable only when your income is more than 50 lakh. Means if your income is up to 50 lakh, then there is no surcharge. But if your income is more than 50 lakh, then surcharge is applicable. More than 50 lakh up to 1 crore, then 10% of taxes. More than 1 crore up to 2 crore, then 15% of taxes. More than 2 crore up to 5 crore, then 25% of taxes. And more than 5 crore, then 37% of taxes. Now guys, what happened? Before 2019, before election, that highest surcharge in the income tax was only 15%. That was highest surcharge. Means this 25% and 37% surcharge was not there. Before 2019, this 25% and 37% surcharge was not there. Now Nirmala Sitharaman ji became the finance minister in 2019. So when Nirmala Sitharaman ji became the finance minister, I don't know why, but Nirmala Sitharaman ji introduced this surcharge. This surcharge of 25% and 37%, this surcharge was introduced by Nirmala Sitharaman ji in 2019 after election. So after election, Nirmala Sitharaman ji introduced this surcharge. But guys, when Nirmala Sitharaman ji introduced this surcharge, then our Indian share market got crash. Means 2-3,000 points, Sensex like down by the 2,000 point, 2,000 to 3,000 points. Sensex was down due to this surcharge of 25% and 37%. Because if 25% and 37% is surcharge on your taxes, then it will be very huge taxes. So many investor and all, like many FII means foreign institutional investor, because suppose they invest in the Indian share market, obviously the tax rate on the long-term capital gain is 10%. After that, that short-term capital gain tax rate was 15%. Now it is a 20%. But tax rate is lower. But suppose on tax rate, if surcharge is added that 25%, 37%, then it is very high surcharge. So many people are, that not happy. Maximum like people involved in the share market transaction, they were not happy with this 25% and 37% surcharge. So people, FII as well as various HNI people and all, they have like withdraw the money from the share market, and share market is decreased by the 2,000 to 3,000 point in the 2019 when Nirmala Sitharaman ji announced about this 25% and 37% surcharge. Now what happened? After some time, Nirmala Sitharaman ji corrected this action, and what Nirmala Sitharaman ji amended, Nirmala Sitharaman ji says that don't worry about that. Nirmala Sitharaman ji says that in case of the long-term capital gain under section 112A, so long-term capital gain under section 112A, that is the long-term capital gain from the share market. Second is, if there is a short-term capital gain under section 111A, that is the short-term capital gain from share market. Or guys, if there is a dividend, so basically you receive dividend also from the share market. So dividend from share market. Or guys, if there is any other long-term capital gain under section 112. Under section 112 means normal long-term capital gain. Now guys, this four type of income are special rates of income. Special income, I can say here special income, special rates income. Now guys, special income, I'm just telling here special income. So guys, in case of this four type of income, 3 is from share market. From share market, long-term capital gain 112 is from share market. Short-term capital gain 111A is also from share market. That dividend is also from share market. And LTCG, that is the non-share market, long-term capital gain, normal long-term capital gain. Guys, in case of the this four income, whatever tax on this four income, first you have to calculate the tax. Because LTCG 112A is taxable at the rate 10% or 12.5%. It is taxable at the rate 15% or 20%. Dividend is taxable as per the slab rate. LTCG 112 is taxable as per the, like earlier it was 20%, now it is at 12.5%. That is the tax rate. But guys, on that tax rate, Nirmala Sitharaman ji mentioned that your maximum surcharge can be 15%. Maximum surcharge can be the 15%, means surcharge more than 15% is not applicable. So in simple word, I can say that, in case of this four special income, LTCG under section 112A, STCG under section 111A, dividend income, this three is from share market only. And LTCG under section 112, guys, LTCG under section 112, in case of this four income, whatever your tax, on that tax, your maximum surcharge can be the 15%. So in simple word, whatever the level of income of this four income, even this income is of 20 crore rupees, then also guys, your 25% and 37% surcharge not applicable. That 25% and 37% surcharge is not applicable, means maximum surcharge 15% is applicable. So what I am saying, that try to understand. In case of the LTCG under section 112A, STCG under section 111A, dividend, that three income is the, like from share market. And LTCG under section 112, whatever the level of income, your maximum surcharge can be the 15%. In simple word, guys, this 25% and 37% surcharge not applicable on the tax on this four type of the income. So tax on this four type of income, this surcharge of 25% and 37% is not applicable. Now guys, I am going to take one example, but you have to focus here. You have to focus here. If you will focus now, then only you will able to understand. Try to understand. Suppose guys, I am going to take one example. Here understand. I need your 100% concentration here. Please focus here. I am going to take one example. Suppose guys, there is a one person, and in case of that person, suppose his spatial income is this four income. Either it is a LTCG 112 or 112A or STCG 111A or dividend income. I am just calling this income as a special income. Guys, here, suppose this is the special income. Now, other income. Other income is other than this special income. And now third column is a total income. Total income means your special income as well as the other income. That is your total income. Now you have to tell me that what will be the percentage of surcharge on tax on special income, and what will be the percentage of surcharge on tax on other income. Try to understand. Very interesting part. All people focus here. Guys, try to understand. Pay attention. Suppose, for an example, there is a one person, name is Mr. Balaji. Name of the person is a Balaji. Now what happened? First example. Guys, suppose in case of Balaji, your this special income, that is LTCG, STCG, 111A and dividend income, this income is 20 lakh rupees. 20 lakh rupees. Now other income is 25 lakh rupees. So can I say that your total income is 45 lakh? Your total income is 45 lakh. So here your special income is 20 lakh. Your other income is 25 lakh. Your total income is 45 lakh. So can I say that is a surcharge is applicable here? Is a surcharge is applicable here? Answer is no, surcharge is not applicable. Because you have to check the total income now. If your total income is more than 50 lakh na, then only surcharge is applicable. If your total income is up to 50 lakh rupees, then there is no surcharge. So in this particular case, can I say that surcharge is not applicable? Even on the tax on the special income, surcharge is not applicable, and tax on the that other income also surcharge is not applicable. So here surcharge is not applicable. Now try to understand all people. Second example. Suppose for an example, my special income is 45 lakh. This four income is a special income. Four incomes are special income. 45 lakh. My other income are suppose 40 lakh. So total comes to the 85 lakh. Total comes to the 85 lakh. Total comes to the 85 lakh. Now question is, sir, is a surcharge is applicable or not? Is a surcharge here is applicable or not? Is surcharge is applicable here or not? Right answer is, guys, here surcharge is applicable or not? Answer is yes, surcharge is applicable. Because your total income, always you have to focus to the total income. You for the surcharge, you have to check the total income. So since your total income is more than 50 lakh, surcharge is applicable. Surcharge is applicable at the rate 10%. So tax on the special income and as well as the tax on the other income, on the both the taxes, your surcharge will be 10%. Na? So here surcharge is applicable at the rate 10%. 10% surcharge is applicable on the tax on the special income as well as normal income. So guys, what I have mentioned, in case of this 4 income, whatever the tax liability on that tax, maximum surcharge can be the 15%. So 10% is possible. Answer is yes, but 25% and 37 is not possible. So here your total income is more than 50 lakh rupees. So guys, here surcharge is applicable. And surcharge is applicable at the rate 10% on the tax on special income as well as 10% on the tax on the other income. Now next part, try to understand here. Suppose for an example, your special income is of 75 lakh rupees and your other income is suppose 85 lakh rupees. So here your special income is 75 lakh, your other income is 85 lakh. So total income comes to the 1 crore 60 lakh. So total income comes to the 1 crore and 60 lakh. Guys, here surcharge is applicable at the rate 15%. Because your total income is more than 1 crore up to 2 crore, then surcharge is applicable at the rate 15% of the taxes. So 15% surcharge is applicable now. No issue till the 15% surcharge. So here surcharge is applicable on the tax on special income 15%, tax on other income also it is a 15% surcharge is applicable. 15% surcharge is applicable. But now guys, there is a next twist is here. Suppose for an example, your special income is 1 crore rupees. Your special income is 1 crore rupees. And your other income is suppose 3 crore 20 lakh. Your other income is 3 crore 20 lakh. So can I say that my total income is 4 crore and 20 lakh rupees? My total income is 4 crore and 20 lakh rupees. So guys, here can I say that my total income is 4 crore and 20 lakh rupees. So it is more than 2 crore up to 5 crore. It is more than 2 crore up to 5 crore. So surcharge should be 25%. So here my income is more than, here you have to check the total income. So total income is more than 2 crore up to 5 crore. So surcharge should be 25%. But guys, tax on the special income, on the tax on this 1 crore, my maximum surcharge can be 15%. So tax on special income, your surcharge will be 15%. And guys, on the tax on your other income, because your total income is more than your 2 crore rupees, so surcharge should be 25%. So tax on your other income, so on other income, whatever the tax, on that tax, your surcharge will be 25%. The tax on other income and on that tax, your surcharge will be 25%. But guys, now there is one twist in the next part that you have to understand very carefully. Yeah? Try to understand. Try to understand. Suppose for an example, your special income is 1 crore 50 lakh. Special income is 1 crore 50 lakh. Your other income is suppose 1 crore 80 lakh. Your other income is 1 crore 80 lakh. So total comes to 150 plus 180. It comes to the 3 crore 30 lakh. Now 3 crore 30 lakh. I need your concentration here. Huh? Here I need your concentration. Now your special income is 1 crore 50 lakh. Your other income is 1 crore 80 lakh. Your total income is 3 crore 30 lakh. Now guys, your income is more than 2 crore. So surcharge should be 25% on the taxes. But guys, on the tax on special income, your maximum surcharge can be the 15% only. tax on special income, your maximum surcharge can be the 15%. Now guys, you have to check the other income. Here your total income is more than 2 crore. But guys, this total income is more than 2 crore due to the special income. Na? Because your other income itself is below 2 crore. Na? Other income is not more than the 2 crore. Other income is not more than the 2 crore means your total income is more than 2 crore. But reason is special income. Reason is special income. Special income is the reason. Na? Without this special income, your normal income is up to 2 crore rupees. So guys, tax on this other income, here surcharge will be the 15% only. Now your question is, sir, in the last example, why it was 25%? Because your other income itself was more than the 2 crore rupees. But here in this part, here in this particular part, guys, your other income is up to 2 crore, na? But your total income is more than 2 crore. But other income is up to 2 crore, na? So here tax on this income, on that surcharge is applicable only at the rate 15%. Now one more point, try to understand all people. One more point. Suppose your special income is the 9 crore rupees. Your special income is 9 crore rupees. Your other income is only 60 lakh rupees. Your other income is only 60 lakh rupees. So guys, your total income is 9 crore 60 lakh. Your total income is 9 crore 60 lakh. Now, on special income, whatever the level of special income, if your income, guys, see, your income is a 9 crore 60. So surcharge should be 37%. But on special income tax, your maximum surcharge can be 15%. Now on the other income, guys, on the other income, what could be the surcharge? You will say, sir, on other income is not more than 2 crore. So here, sir, surcharge should be the 15%, or even we can put the surcharge is only 10%. Right answer is here surcharge is the 15%. Now guys, 15% surcharge anyway is applicable when your total income is more than 1 crore. So when your total income is more than 1 crore, na, if your total income, this total income is more than 1 crore, so anyway 15% surcharge is going to be attracted. You have to just check that is 25% surcharge is applicable and 37% surcharge is applicable or not. 15% is going to apply if your total income is more than 1 crore. So here, don't confuse, don't take 10% here. Guys, 15% is applicable because total income is more than 1 crore. Na? So if total income is more than 1 crore, then 15% is anyway apply. You have to just check that is 25% and 37% is apply or not. Now I am going to explain you this concept with one very simple language. You will able to understand. Try to understand. It's very simple. Just focus here. You will able to understand. Simple point. Suppose if your total income, try to understand. All people focus here. First case, suppose your total income means special income plus other income. See, your total income is special income plus other income. That is called your total income. So your total income is, guys, suppose up to 50 lakh, na, then there is no surcharge. No surcharge. It's very simple. If your total income is up to 50 lakh, there is no surcharge. But guys, if your total income, try to understand, if your total income, that is special income plus other income, if it is more than 50 lakh up to 1 crore rupees, then surcharge is applicable at the rate 10% on the tax. On the tax, surcharge is applicable at the rate 10%. Now guys, third part, suppose your total income, that is special income plus other income, if it is more than 1 crore up to 2 crore, then your surcharge is 15%. Now that is the standard. But till this time, till this particular, like up to 2 crore income, there is no need to check anything. You just have to check the total income. Okay. So total income is up to 45 lakh, there is no surcharge. Total income more than 50 lakh up to 1 crore, 10% surcharge. Total income more than 1 crore up to 2 crore, 15% surcharge. Now you have to check that, suppose if your total income is more than 2 crore, then what will happen? Try to understand. Here, try to understand. So guys, suppose for an example, your total income means special income plus other income. Special income plus other income. If your total income is more than 2 crore, if your total income is more than 2 crore, your total income is more than 2 crore, special income as well as other income, special income and other income more than 2 crore, then how surcharge will be applicable? So just you have to focus here. If your total income is more than 2 crore, then what will happen? So guys, here you have to always remember that, okay, whatever the tax on your special income, special income tax, here surcharge you have to add is 15%. So 15% surcharge, this is very clear. If your total income is including special income, other income, total income is more than 2 crore. So on your special income, maximum surcharge is a 15%. So 15% surcharge is applicable. But guys, on tax on other income, so sir, surcharge on tax on other income. Now here you have to focus. Here you have to check it. Okay, sir, what will be the surcharge on tax on the other income? So first is, if your other income, special income, just ignore the special income. If other income is up to rupees 2 crore, means other income, balance income is not more than 2 crore, that is within the limit of 2 crore, then surcharge is applicable at the rate 15%. Then surcharge is applicable at the rate 15%. So here guys, surcharge is applicable at the rate 15%. So in this example, guys, try to understand. Here, your income was more than 2 crore. So on the tax on the special income, your surcharge is 15%. Now you have to check the other income. Other income is not more than 2 crore. So other income is not more than 2 crore, then surcharge is applicable at the rate 15%. Surcharge is applicable at the rate 15%. Now your question may be like that, sir, why not here 10%? Guys, that is not possible, na? Because overall your income is more than 1 crore, na? Then 15% surcharge should be applicable, na? Your total income is more than 1 crore, so 15% surcharge should apply, na? So that's why here it is a 15%. So what I am saying that if your other income is up to 2 crore rupees, then surcharge on tax on other income is 15%. But guys, suppose for an example, your other income itself, itself is more than 2 crore up to 5 crore. Means your other income is more than 2 crore up to 5 crore, then guys, the surcharge on the other income is, surcharge on the tax on the other income is 25%. And guys, suppose your other income itself is, itself is more than 5 crore, then here surcharge will be tax on other income is 37%. So only you have to remember this part. And if you remember this part, your question, all question will be solved through this. So try to understand. Suppose first is your total income. Total income is special income, other income, both income. Total income is up to 50 lakh, there is no surcharge. Total income more than 50 lakh up to 1 crore, just add the 10% surcharge. More than 1 crore up to 2 crore, just add the 15% surcharge. Now, if your total income is more than 2 crore, then what will happen? If your total income is more than 2 crore, whatever level of total income, now on the special income, your maximum surcharge is 15%. Now on the balance income, now you have to check that what is the level of other income. Your other income is up to 2 crore, then surcharge on tax on other income is 15%. Your other income, other than special income, that other income is more than 2 crore up to 5 crore, then surcharge is 25%, and other income is more than 5 crore, then your surcharge applicable at the rate 37%. Your surcharge applicable at the rate 37%, their surcharge applicable at the rate 37%. Now guys, on the basis of this knowledge, we are going to check here. All people just focus here. I need answer from you. So here I am just, first I am hiding all the answer. So here I am hiding all the answer. I need answer from you, okay? Okay, so this is the question. Question is, example is given, total income excluding special income, it means other income. This is your other income. This is your other income. This is your special income, that is capital gain and dividend, and this is the total income. Now you have to tell me what will be the surcharge on the special tax on special income, surcharge applicable on the tax on the calculated on special income and other income. So guys, first case, your total income is only 45 lakh. So total income is 45 lakh. So in the both the cases, there is no surcharge. So here surcharge rate is nil. Now you have to tell me for the remaining question. So remaining question, that all amount is in the lakhs. So here it is a 20 means 20 lakhs. So every amount is in the lakhs. Now you have to write in your comment box, just you have to write, okay, point number 2, suppose that surcharge rate is 10% and 10%, or suppose 10% and 25%, or 15% and 25%. So just try to solve this question. I'm going to give you 2-3 minutes time. Just do it. Aji, done. So guys, this is all your answer. You can check it now. So just check that your answer are correct or not. So these are all answers. You have to check it. Done. So now, if you check this answer, then please check the example number 1 also. Just check this example number 1. Is this example number 1 solved correctly or not? Just check it. Example number 1. This was all the answers. I think your answer are correct. Okay, now just check the example number 1. Example number 1 and just check it. It is correct or not. Example number 1. Check. Done with the question number 1? If question number 1 done, then just say chin tapak done. If question number 1, this example number 1, if done, 112 is Shri, it was 20% earlier, but now it is a 12.5% now. It was 20% earlier, but now it is a 12.5%. If your question number 1, example 1 done, then just say chin tapak done. Chin tapak done. You have to say, you have to write chin tapak done. Vishakha, chin tapak dum. Not dum, it's done. Shashank. Dum is a like original version, but we will say chin tapak dum done. Done. Yes. Okay, guys. Now there is a one more example. That is the example number 2. And example number 2 is very interesting example. Now in this example, there is a dividend income also. In this particular example, there is a dividend income also. Just focus here. All people just focus here. If you are not done, then also just focus here for some time. Example number 2. Now guys, in this example, what happened? Mr. BB is a resident, age 34 years. His income detail for the previous year 24-25 are as follows. So his income detail for the previous year 24-25 is so and so. Now capital gain under section 112A is a 2 lakh. Capital gain under section 112 is a 1 lakh, and this is transfer on 23rd of July 2024. So guys, if asset is transferred on 23rd July 2024, then it is after amendment, because asset is transferred before 23rd July, then old rate, otherwise new rate. So here rate is 12.5% is applicable in excess of 1,25,000. Now guys, this 112 is a 1 lakh and asset transfer before amendment. It is also before amendment. Dividend is a 13 lakh and other income is 3 crore 34 lakh. You have to calculate the tax liability. He shifted out of 115 BSE. Well, he is not opting 115 BSE. There is a section 115 BSE where there are separate slab rate, like up to 3 lakh there is no tax, 3 lakh to 7 lakh, 5%, 7 lakh to 10 lakh, 15%, 10 lakh to 12 lakh. There are slab rate, different slab rate. So that section he opted out. So here guys, how to calculate the tax? Now there is one interesting case here. Guys, capital gain 112A is taxable at the rate 12.5% in excess of 1,25,000. So here 2 lakh rupees minus your 1,25,000, remaining comes to 75,000. So 75,000 multiplied by 12.5%. So it is a tax 9375. Now guys, that capital gain 112 tax rate is at 20% earlier. So 20% is 20,000. 111A is a 3 lakh, earlier tax rate was 15%, so 15% 45,000. Now guys, this dividend is basically taxable as per slab rate. If you remember from your intermediate, then you know that dividend is part of your income from other sources. And dividend, there is no special tax rate. For dividend, it is taxable as per slab rate only. So dividend is going to be taxable as per the slab rate. So here 13 lakh rupees and 3 crore 34 lakh rupees, this two income are going to be taxable as per the slab rate. So guys, here 13 lakh and 3 crore 34 lakh, so total is a 3 crore 47 lakh. So 3 crore 47 lakh is going to be taxable as per the slab rate. So up to 2,50,000 there is no tax. 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20% more than 10 lakh, 30%. So this slab rate we have to use. So guys, as per this slab rate, if I calculated the tax, then tax comes to the 1 crore 2,22,500. Because dividend is also taxable as per slab rate. So this is my total tax. Now how surcharge will be applicable? So guys, surcharge, you know that especially here total income is a more than 2 crore. So surcharge should be, total income is more than 2 crore. So surcharge should be 25%. But guys, tax on the capital gain, tax on the, like this, all three, capital gain and dividend, maximum surcharge can be 15%. And your other income is more than 2 crore. So obviously your other income is more than 2 crore. So or tax on this other income, your surcharge will be 25%. Because other income itself is more than 2 crore up to 5 crore. So tax on this other income and surcharge on that tax will be 25%. So here guys, here first we will take the capital gain. So on the capital gain, your capital gain is 9375. This is capital gain and this is capital gain. So on your capital gain, your maximum surcharge on this 3 capital gain, your maximum surcharge is 15%. So on your capital gain LTCG and STCG 111, your surcharge is, so 9375 plus 20,000 plus 45,000. So here 74,375 multiply by 15% is surcharge. So multiply by 15% comes to the 11,156. Now guys, tax on dividend also. On dividend also surcharge should be 15%. But dividend is taxable as per slab rate, and dividend is taxable as per slab rate, and tax on dividend is included here in the 1,02,22,500. So in the 1,02,22,500, because your dividend is 13 lakh, this 13 lakh is in this balance income, 3,47 lakh. And this dividend of 30 lakh is part of the 3,47 lakh, guys, part of the 3,47 lakh. So it is included in the 3,47 lakh rupees. So now question is that, sir, how we will segregate the tax on dividend? Because dividend is taxable as per slab rate. So how we will calculate the tax on dividend? Can we calculate directly on the 13 lakh of the dividend? Just take the 2,50,000, no tax 250. No, you cannot do that. So what we will use here, we will use the average tax rate formula. How average tax rate formula? Ki guys, your tax on the 3,47 lakh, your tax on the 3,47 lakh rupees of income, 3,47 lakh rupees of income, your tax is 1,02,22,500, and in this 3,47 lakh rupees, your dividend is 13 lakh. So what should be the proportionate tax on the 13 lakh? So what should be the proportionate tax on the 13 lakh? So 1,02,2500 divided by 347 multiply by 13 lakh. So it comes to, guys, 3,82,976. This is tax on the dividend. And guys, on the dividend also, maximum surcharge can be 15%. So here we will apply the 15% surcharge. So on 3,82,000 here, how we calculated? 1,02,22,500 is tax on the 3,47 lakh. Multiply by 13 lakh. So 3,82,976 is a tax on the dividend. Proportionate tax we have calculated. So on this tax of 3,82,976, your surcharge is 15%. And guys, on the balance tax, your surcharge will be 25%. In this way, we have solved this question. Okay. Now, guys, this 3 question is in your homework for the tomorrow. You have to do the homework. Tomorrow we have lecture. Friday we have lecture. This Saturday maybe I will give you the leave. Saturday, Sunday. From Monday we will restart. So guys, tomorrow you have lecture. Answer is yes. So you have to solve this 3 question. Test yourself. There is one person, SK, he is a non-resident, age is 64 years. How income tax will be calculated? So you have to do this 3 question in the homework. SK, Dev and AK. Okay, done. And also you have to read whatever given here on the page number 3. So just read whatever given on the page number 3. After that, on the page number 4, that we already did. Now, this question we already did. After that, tax rate of company and all, just you have to skip as of now. After that, example number 1 we did, example number 2 we did in the class. Example, these 3 examples are in the homeworks. Just you have to calculate tax at your home. Okay, so just on the rough book, or you can solve here also, whatever comfort zone. Just solve this question, and these are the answer. You have to check it. Okay, these answers are correct or not. I don't know. There may be mistake in the answer because this time there are lots of amendments, so there may be mistake in the answer. So you have to check it. Okay, so thanks a lot, people. That's enough for today from my side. We will start tomorrow with next part. Tomorrow we will discuss about the tax rate of the companies, partnership firm, AOP, companies, partnership firm, local authority and all, the cooperative society. That we will discuss tomorrow. So that's enough for today from my side. See you tomorrow. Bye. Take care. You have to revise everything, whatever we did today, and also just you have to do the 3 questions. Okay. Thanks a lot, people. That's enough for today.